Good afternoon, everybody. The room got quiet in the expectation that something was going to happen, so I figured I better stand up. Good afternoon. I'm Christiana Riley. I'm the CEO of Deutsche Bank here in the Americas and a member of Deutsche Bank's management board globally. It's my absolute pleasure to welcome this group to our headquarters here in New York, Deutsche Bank Center at 1 Columbus Circle. It's a privilege to be welcoming this esteemed group of FinTech leaders. If you'll indulge me for just a second to talk a little bit about Deutsche Bank in the Americas and our connection with innovation. We are celebrating 150 years of history since our inception in the Americas in 1872. This year, it's a big milestone for us. Deutsche Bank came to the United States in 1872, as we do today, to help our clients in the home market, notably back then a predecessor firm to what we today know as Siemens, in their investment in helping to build the Pacific Northwest Railway back in 1872. And that's a tradition we continue today. And I think this event is a nice connection to that, creating that connectivity and providing room for innovation and support of innovation. I'll also tell you that 1872 was actually only 2 years after Deutsche Bank itself was founded in the home market in Germany. So we're celebrating 152 years of history for the institution globally. And I think, frankly, that's a track record of international expansion that any unicorn in today's market can also be proud of. And that was 152 years ago for us. So look, we continue to operate Deutsche Bank here in the Americas in that vein. We continued from 1872 onward financing infrastructure projects and increasingly supporting not only our home market clients into this market, but some of the most iconic companies and brands in this market, Coca-Cola, General Electric, and the like. Once you've earned that place in the American economy, and I think many of you who are looking to access this economy, you need to understand that this is a dynamic economy that requires you to reaffirm that over time. I returned, and many of you may know a little bit my background. I've been with Deutsche Bank for close to 20 years, most of my time spent with our business in Germany, and moved here to the United States 3 years ago. And it was with kind of a unique set of fresh eyes that I came back to my own home country and took a look at things that were working here, things that were not working here, and the comparison to my experience in Europe. One of my first observations coming back here after 20 years in Europe was indeed about the ability to scale innovation here in the United States, and what a tremendous ecosystem has been built, fostering entrepreneurship, rewarding good ideas, tolerating reasonable amounts of risk-taking, and the results that you can achieve in a market that is as deep and liquid as this one. I think often we equate that then with Americans must be more innovative themselves than other markets. And I think that's actually a mistake. In particular, we know the German tradition coming out of the very strong industrial roots. There's a tremendous amount of innovation taking place, but we are struggling to create the necessary scale and to drive that ecosystem. So an initiative like this, the opportunity for Deutsche Bank to offer the platform today for all of you to come together to start to tackle these challenges, to start to understand how you can gain greater access to this market, but also learn about some of the effects and the ingredients that create that valuable ecosystem, is something we're very proud to be associated with. I'll also perhaps share an observation and reflection around this unique point in time in the geopolitical world order. And again, as a German institution, and looking from the other side of the ocean at developments in Germany, just share some of those observations and how I think that also connects to the mission of this conference. I think we need to do a sober analysis of what has been happening in Germany over the last 2 decades, where the German economy has benefited from a uniquely affordable and reliable sources of energy. Secondly, has benefited from accommodative monetary policy. And thirdly, has benefited from the vast growth of available delivery markets in Asia, which have provided a tremendous source of growth opportunity. We're seeing an obvious inversion of all three of those factors at the moment that are turning the strength of Europe's largest economy on its head and should be forcing us into a conversation of rethinking the balance within the German economy between what has largely been growth driven by heavy industry to a more hybrid model. And what do we need to be doing to, again, mission of this conference, to create the ingredients that will allow a more balanced economy with more balanced sources of growth to emerge. So arguably the success of initiatives like these will be Germany's success to the extent that we can get it to take hold. And we're pleased, as I say, to be part of that, lending not just our facilities, but also our brand, wanting to be part of creating that future balance for the German economy. So enjoy your time in our building and in our facilities. We opened this new office, Deutsche Bank Center at Columbus Circle, in September last year. So we're just about a year in the building. We think it's wonderful space. We love providing it for events like this. We hope you enjoy it. I'm going to need to briefly step out after Achim makes some further remarks about the program, but I look forward to being back to joining you all for the reception later this evening. Thank you very much.
Good afternoon, New York. That's a special moment for us here from Berlin, being here, or a couple of wonderful FinTechs over. Some are already in the market, others are looking for more in this wonderful market. Dear Christiana, dear Deputy Consul General of Germany, Wolfgang von Heinitz, dear Parliamentary Managing Director of the CSU and member of the German Parliament, I think Stefan Müller will be soon with us. He's not here yet. Dear representatives of Deutsche Bundesbank in New York, dear representatives of the German American Chamber of Commerce, dear representatives of the state of Berlin, Sebastian Serafin, dear representatives of the media, dear finance and tech community in Berlin and from New York. We are streaming this, and I hope some will be on the other side of the ocean listening to us now. Ladies and gentlemen, welcome to the first FinTech Leaders Conference of Germany's FinTech capital. I come to this a little bit later, why Germany's FinTech capital. My name is Achim Olga. I'm the CEO of the Berlin Banking Association, and I'm the chairman of the Berlin Finance Initiative. It's a great pleasure to welcome you today here this afternoon. Our special thanks to Deutsche Bank, Christiana Weiler and her team, together with our great teams of the BFI USA, Alexander Dahmen, I think many know him already, and the BBO USA. What is the Berlin Finance Initiative? The Berlin Finance Initiative gives our financial sector a platform, representing it in all different colors, nationally and internationally. We build bridges between the traditional financial institutions and the FinTechs and the financial sector, and universities, lawmakers, regulators. As an umbrella organization, we define common goals, drive change, and enable better, resilient, and sustainable financial system. Given this background, I'm highly delighted to share with you some brief thoughts on Berlin's FinTech Hub and the relations to the US. Ladies and gentlemen, why are we gathering here in this beautiful location today? The answer is we, the Berlin Finance US team, have started an ambitious FinTech Leaders program a few months ago, together with the Berlin Business Office here in New York and the Berlin government, and funded by the European Union. The goal is to strengthen ties between the EU, FinTech, Silicon Valley, Berlin, and New York, to create inbound and outbound business opportunities, and to help the scaling of our great Berlin FinTechs to the USA. Let's take a look at the hub in Berlin, the beginning, and Christiana and Deutsche Bank, not you personally, is the best example. The beginning of the modern financial services in Berlin, as well as here in New York, went back in the late end of the 19th century. Until the middle of the 20th century, Berlin was a pace setter for the German banking industry. Deutsche Bank has been founded there. Together, the center is primarily today, the center is primarily in Frankfurt, as most of you know, our German Wall Street, with the stock exchange, Deutsche Bundesbank, the ECB, and most recently, the International Sustainability Standards Board. In contrast, Berlin had to master difficult upheavals. Division, reunification, socialism, and structural change have left their marks. Today, in the area of banking and insurance, the city is a seat of a few headquarters, but primarily the home of institutions, regional management, their governmental and public affairs departments, as well as central location for back office and internal services. But a creative environment with excellent universities, business schools, often free from traditional constraints and therefore innovative, has promoted a digital startup scene in the last 2 decades. Berlin has become the German capital for startups. 10.5 billion euros were invested in the Berlin scene last year. This development has not gone unnoticed in the financial sector. The FinTechs are now an essential component of the European startup ecosystem. Berlin is the undisputed #1 in Germany. Over 1/3 of Germany's 1,000 FinTechs here, including 6 out of 7 German unicorns are in Berlin. In addition of the retail focus, the B2B business is particularly important for the companies. The shooting stars, including above all neobanks, neo-insurers, neo-traders, banking, wealth management, or software as a service, and online payment provider. We observe that digital-only banking is clearly on the rise, including new services such as wealth management, as well as broader services bundles. This has even been enhanced by growth of neobanks and digital payments, as well as by increased needs through the COVID-19 pandemic. In this respect, the dynamics of the Berlin Hub are reflected in its rankings. Berlin achieved high scores in global context and top position within Europe, well ahead of the leading competitors, Paris, Amsterdam, and Stockholm. And when asking the founders, they even prefer Berlin to London. The trend is impressive and owed to the FinTech and the DeFi scene. FinTechs create innovation for and together with the established financial sector. They are not only competitors, they are also important cooperation partners. Although there is still a lot of untapped potential for collaborations. For example, in carbon analytics or data insights in order to achieve a net zero economy. And since the US and the European Union, and you mentioned this, Christiana, are standalone and together by far the largest markets in the world, we need to talk. Therefore, let's start this conference. I'd like to introduce to you Scarlett Sieber. Scarlett is not only the Chief Strategy and Growth Officer of the famous Money 2020. Besides being a speaker and a great moderator, she has published lately her book in May, Embedded Finance, When Payments Become an Experience. And before handing over to you, I would ask Christiana and also for a team to get something special from us from Berlin. It's called the Buddy Bear. And I brought it over. Office, or you want to put it, it's hidden in here. The Buddy Bear is, you can have it, well, not as large as the building here, but you can have it quite large and a little one. And this one is not so heavy. I had to carry a couple of them over the Atlantic, and I hope you will enjoy it.
All right. Well, thank you. Okay, I've double mic'd. We'll see which one goes here. Hello, everyone. So happy to see you. Who here knows who Money 2020 is by raising of hands? Okay, most of you, about half. For those of you that don't, we are the leading FinTech show conference in the world. We have shows across different geographies. We just had our show in Vegas that ended on Wednesday. Do you want me to talk from this one or this one? Does it matter? This one? Okay, so I don't need to, good. I'll turn this off then. Okay, so you can still hear me okay? Okay, perfect. So anyways, we just ended on Wednesday. So while I should be curled up in a ball in a dark closet in my house after mingling with 11,500 of the best FinTech people in the world over in Las Vegas, I am here with you. Why? Because outside of the fact that my last name is Sieber, and yes, that is German, I'm actually mainly Swedish, so sorry to disappoint you there. I do have German on my dad's side. But Germany is a very, very strategic geography for us at Money 2020, particularly for our Europe show, but definitely for our US show as well. And Achim, you gave some really, really great examples of stats. Alex, I think you'll give some more. So let me just sprinkle a few in. Mine might be a little bit more out of date than yours. But for us, and I come from FinTech, I live, breathe, eat, sleep FinTech. I was a CIO of a bank. I've always been on the digital side looking how to make banks and FinTech work together. I look a lot at funding. Germany #2 in Europe in terms of FinTech funding in 2021. 62% of that money went to Berlin, not surprisingly. And in terms of Findexable's global index that they do every year, in terms of like hot FinTech cities, Berlin is #6 across the globe. So definitely really, really interesting. Over 400 FinTech startups in Berlin. You gave the 1,000 startup stat, 1,700 plus FinTech startups in Germany. So certainly something to work with there. I am very, very passionate about the stuff that we've seen come out of the market. I'm really excited about the conversations that we are going to have today. Welcome all. I think you're going to enjoy. So really quickly before Alex comes back up, here's an outline of how things are going to go today. So Alex is going to give you a little bit more details around FinTech in Germany and in Berlin specifically. We're going to have a panel conversation all around what it's like to scale outside of Germany. Not surprising, a lot of the focus will be here on this great country in New York, in the US. We're going to have a pitching session with startups giving it their all. We'll have some great judges having that conversation. We'll do the females in FinTech thing, talking about what it's like to scale as a female in this industry, and then cocktails and networking. So with that, Alex, over to you, and you will see me again shortly.
Great. Thank you, Scarlett. So actually, I saw Scarlett last week on stage with Serena Williams, which was great, in front of 11,000 people. Wow. Thank you for being here. It's been a tough week, I guess. So also, thank you for being here, everyone. It's a great pleasure that we can organize this with you. We have lots of great FinTechs today, lots of great speakers, and everything is about like we expanding to US market. It's like a really tough nuts to crack, actually, the market for especially German or European companies. So today we want to shed some light into it, and hopefully we get some ingredients out of it. Also later with Leita to how we can really transatlantic opportunities really foster in female leadership. Yeah, so before we head into the fun part of the panel, I just want to introduce you to our newly funded or newly actually launched initiative. And our initiative is the FinTech Leaders. We call this our first transatlantic network, really bringing over FinTechs from Berlin, from Germany into the US market. So if you a FinTech leader, you consider yourself a FinTech leader, get later also on the roll-ups, you see the QR code, please sign up and join us on a nice adventure, great adventure across the Atlantic. Actually, Achim already, we launched 1st June, so it's a fairly new initiative, and we are going to new locations across the USA also. We've been on the road actually last couple of days with our FinTechs in Atlanta and Las Vegas. So it's been a crazy week so far. So our program goal is really to supporting Berlin-based FinTech startups and organizations get ready. So market readiness is really important. First, getting the decision in the market, I think that's the toughest one. And then, of course, implementing it and going to the market. And our program is especially designed right now to really get ready. Yeah. Our vision is, as we heard, Berlin #1 FinTech in the European Union, which is great. But we want to maintain it. And we can only maintain it if we scale across the Atlantic. Yeah. So With that, today we're in New York City. As I said, we've been into Atlanta. We've done lots of great memories, and hopefully some of these startups will tell you afterwards when we mingle together. Next stop will be Miami, Florida, December. So you want to come? Definitely. So if you are a Berlin-based fintech, also across the Atlantic, please join us. We will have a great time in Miami, more looking into the DeFi scene, crypto scene, what's going on there, and then comparing Berlin with Miami as well. Yeah, comparing two hotspots in crypto. I guess it's a fun conversation there. So as I said, like we have a huge delegation here of, I would say 10 companies from Berlin, which is great. We've done this, and today we're here. And yeah, these are the companies we had with us the last couple of days. And yeah, we've done great stuff, lots of memories, and hopefully we can create more memories today. Also, this is also a goal. So please mingle with our startups after also the pitch their business models. It's really important that we get together, closer the ties, and make a stronger connection between Berlin and the USA. So welcome to Miami. And another announcement, then I get into the Berlin FinTech market. This is not online yet, but if you want to save one of 20 open slots for a free workshop to get ready for the market, it will be on 1st December. Just approach me and I can sign you up later as well. So if you're really interested in the market, this is a good start and kickoff into USA. All right, Berlin FinTech. So we heard a lot of things already, and I think the figures are pretty accurate, which is great. Also, thank you, Achim. So I will skip most of them. So who has been to Berlin here in this room? Who's been in Berlin, not from Germany? Okay. So I want to know a little bit more. What was the other thing you have seen as an American in Berlin? But let's talk about it like behind the scenes later on. But Berlin is a really diverse city, very green, lots of fun, nightlife, and a thriving startup scene. So let's talk a little bit about Berlin startup. It started kind of after the fall of Berlin Wall, and this actually enabled Berlin to be more in this underground artsy scene. Being Bonn still the old capital and had the department still in Bonn, in Berlin it was like a slow start, I'd say. But then it was picking up with Zalando and this whole era during the dot-com bubble. And Zalando, one of the biggest e-commerce platforms, actually made Berlin as a startup hub, internationally known. Rocket Internet era was actually the first venture builder, or not the first, but one of the most prominent venture builders who made really Berlin startup, fintech, whatever hub. Yeah, it's really great that we started this journey there. And lots of companies like Delivery Hero, HelloFresh, Wunderlist all came from Berlin at that time. It was a really thriving, good time with lots of investment flowing into the Berlin scene. And this is through the labs, we actually diversified the whole industry and the whole startup scene. So that's what we're in now. The fintech scene came up, and N26 as one of the most prominent examples from the market emerged. So this is where the fintech story of Berlin starts. Just a couple of more figures, you heard them already. 4,500 startups and scale-ups in the Berlin ecosystem, which is great. 60% of all German funding went to Berlin startups, which is a great number. And we are #1 in VC funding. And you could see it here in this chart. We are still lagging behind USA, but we are #1 in European Union, which is a good success also for the location and the hotspot of Germany. With the VC's inflow and the investments, Berlin became a really popular, really internationally popular startup hub with almost 50% of foreign employees, which makes it really attractive for anywhere in the world to come to Berlin and build their businesses together with a lot of serial founders and entrepreneurs. and also create 80,000 jobs, which is a great number here. And these 80,000 jobs are made also in one of the strongest vertical, which is FinTech. So this is a chart. I showed you the timeline. Now we're in 2022, but in 2021, we had a tremendous year with 15 new unicorns, and 4 of them are FinTechs, which is, you see, like, this is the importance or the significance of the FinTech market. Trade Republic here, Refox, InsurTech, Mambu, and Solaris Bank are the unicorns getting to the unicorn status. And we have here the former CTO as well of Solaris Bank, Peter, but he will introduce himself later. Hey, Peter. Yeah, so Berlin FinTech, big market, 6 out of 7 unicorns from Germany in the FinTech scene. 85% of FinTech investments concentrate on Berlin. We have 80%, almost 30% of all German FinTechs are based in Berlin. So you see, you know it, you heard it already, big market. Even Deutsche Bank is there, has a nice venture lab here as well. So it is really number 1 in the EU 2020 and number 6 in the world, you said, right, Scarlett? Wow, which is good. And just talking about the segments, personal finance management with 20% of all FinTechs are the largest segment. We have FinMarie here as well with wealth management for women, also being included in that group. Payment, credit, investment is strong, banking API. You see, like, there are many industries, many different segments there. But what is really interesting also is that we have a strong emerging DeFi scene, where also Peter is coming in, and maybe can talk about it later on when mingling to really, give you an understanding on how big the DeFi scene is growing in Berlin. We have a great infrastructure in investments. We have 180 VCs, 115 active business angels, and they are mostly investing in embedded finance, blockchain technology, sustainable finance. So all these trend topics are also, like we've heard in Money 2020, also your book, Embedded Finance is your thing, right now. So it's also in Berlin, it's a huge thing right now. So embedded finance is a thing to look into, and also in looking into your book and to learn more about it. Yeah. Now I want to compare it a little bit with the American market just quickly. And you could see, like, this is a new release from CB Insight, which is a great source, with the 250 top FinTechs around the world. And you could see 50% of all these are made in USA, which is huge. And only 8 are from Germany, and at least from Berlin, all of them, which is great. But of course, we cannot compare the countries. But I just want to show you the dimensions between those countries, and to give you an understanding how big this market is here. Also, for later stage companies, it's really important to go to US, because there's for later stage companies, securing financing for their business is still the USA, especially important for scaling up your business. And last slide, you see the bubble, just a graphical presentation of how big the market is. 156 new unicorns in the FinTech space, which is a recent number. Even though, of course, there's a bit of a downturn in investments right now, but just a slight one. But even though there, USA is leading in the world. Yeah, with that, this was like a quick overview of FinTech in Berlin, and I hope, when you want to speak with us, it would be great to see, like, how we can business in Berlin, but also how to make business in USA, Berlin Finance Initiative USA. We are happy to support you on your journey to the US and vice versa. Thank you.
Need this? My panelists are going to come up and join me, right? Please come up on the stage and we'll do a quick intro there. Alex, do we also have a microphone for anyone halfway through? So we're going to go ahead, come up on stage. Hello, hello. Are we, there we go. Here we go. Come on up. I'll sit wherever you don't sit. How about that? Perfect. You guys left me all the way on the end. Disappointed. kidding. It's okay. I'll just lean forward so you can see me. Okay. So we have a lot to cover. One thing that I want to make sure that you all know is I will be asking questions clearly, but I want you to ask questions as well. So I'm going to be taking time on my handy dandy watch here, and about halfway through, I will open it up for audience Q&A. So keep those questions front and center. I'm going to move this way so I can see all of you at the same time. All right. So let's get it started. Not surprisingly, you saw on the slide before the purpose, scaling your business across Atlantic. We're going to talk a lot about that. But before we do that, let's get warmed up here, get started. Can all 5 of you gentlemen please give me your ideas? You just heard a ton of stats. You probably already knew all of those because you're experts in fintech in Germany and the US. The question is, on a scale of 1 to 10, how developed are we in the German fintech landscape? 1 being just getting started, 10 being booming. Just by a show of hands, what's your answer? Scale of 1 to 10. Okay, so 4, let's start.
Well,
4, let's start with the 4.
So I think like the comparison to the US is a quite stark one in terms of how willing people are to engage in risk, how easy it is to kind of like, and on the one hand side, justify that you are not pursuing a career in banking, but that you are founding actually a company, and also how acceptable it is to fail. And I think in Germany, we are doing a lot of things right, but the things that we are doing are often also no-brainers. So oftentimes when you see a German unicorn, you look across the Atlantic and there is already exactly the same company, and it's fairly imaginable where people got the idea from. And so I think there is quite a long way to go in terms of like true fintech innovation in the German space.
You said 8. Let's go to you.
I need to have the opposite view on that. As of being in the fintech space now for roughly 12, 13 years, it would be weird to score it like 4, because that would mean nothing is happening over the last 12 years. So I think it's quite developed. It's always not so easy to set the right context. What is it comparing to, and things like that. But there was a lot of achievements over the last years. There will be anyhow developments also over the next 10 to 20 years. So I think we should not be undervaluated what is already achieved. There you can always learn from some markets, from the US, from APEC, from all the other countries, but that's normal and not a reason for rated 4.
Anyone else want to add anything to that? Are we ready for the next question? Next question. Okay. You heard the stats. The US is the biggest market, but let's get a little bit more into depth. Any one of you can answer this. Why does it make sense to, when you're scaling, to go to the US next? Anyone can answer. Go ahead, Martin.
Yeah, I think, I mean, there's a couple of ways to look at it, but I think one obvious one is the sheer size of the market, and also the market itself being somewhat homogeneous, right? Of course, there's different states, of course, there's very local differences, but you do have a market of over 300 million, mostly English speakers. And for a fintech or for tech company in general, if I think about where do I want to go next, where's the biggest opportunity, rather than kind of going to the next European market and then cracking that next European market and so on and so on. If you're able to crack the US, it is a really big size of the prize.
Anyone else? Why US?
For us, it's inevitable. So we have to do this because it's the largest market, as mentioned before. Coming from Europe, from a topic, I think I would also, going back to the first question, like, is that market ready? It depends on the topic, right? So we are in sustainability. Sustainability has its roots in Europe. So bringing that across the ocean now, for us, is the major topic, is the next step. It's just, we just have to do this. There's no alternative, especially when you're venture finance. It's, you have to do that. So that's why we have to be present in the market. And we believe the market is ready to go. So at least for our business, but it depends on the topic, right?
Okay, so I just realized that we didn't give you a chance to introduce yourselves. I just assume that everyone knows who you are, but that's really not fair. So tweet version. Killian, let's start with you. Tweet version of who you are and what you do.
Yeah, Killian, Deutsche Bank. Responsible there for the fintech business of Deutsche Bank, plus some payment stuff, and been in the fintech space for 12 years as founder and investor.
Alex told me that you referred to as Mr. FinTech across all of Deutsche Bank. So we have high expectations for what you're going to share over the next hour.
Let's see.
Marcel.
Yeah, Marcel Bock. I'm the CEO of Raisin in the US. I'm originally German, as you might hear from my slight accent. Have been here for around 7 years and was a management consultant with McKinsey in my past life.
My name is Maximilian. I co-founded Fin, a flexible car subscription solution. Started 3 years ago in the US and expanded 8 months ago in Germany, and it expanded 8 months ago. I'm particularly thankful to be here because we are Munich founded. And so thanks so much for Berlin Finance USA having us despite not being from Berlin.
I didn't want to say that. I saw that on your LinkedIn's, but I was gonna keep that quiet, but you got the secret out in time.
I'm Max. I'm the former COO and Managing Director of Penta. We just had the second biggest exit in the German FinTech market this summer. In addition, I'm a both admitted attorney in Germany and the United States. So happy to be here. Thanks for the invitation.
When we do all regulatory stuff, we're going over to you to answer all the toughest questions.
I was fearing that.
Okay.
So Ulrich Peach, co-founder of Ecolytic. We are in sustainability, so we offer sustainability service to the banks to enable them to launch green products. I've always been in the technology space and the SaaS space, so yeah, founded a couple of companies there, grown there. Never to the US market, so that's new experience. But yeah, happy to go.
Perfect. Okay, so back to entering the US market and the strategy around that. Maybe we'll start with you on this one, Marcel. You are a really good example of what has gone well. So can you just give us a little bit more insight and elaborate on what's worked in entering into this market?
Yeah, sure. So maybe just a few thoughts around that. So I think for us, it was always very important to not just send a bunch of Germans to the US and then figure it out, but we were really focused, especially in the beginning, on hiring a strong local team. So I'm officially the only German in our US office. I think the other thing that we did also very much in the beginning is to think about strategic investments in the space. So a few months after we've analyzed the US opportunity and really thought it was a great opportunity to go there, we acquired a fintech in the deposit analytics space, or the deposit space, that really helped us get started and get a a strong kind of kickstart towards expanding. So those would be two things. So local talent, and then also as an existing fintech, you can very early on also look for strategic acquisition opportunities.
Okay, so why, when we think about, there's a lot of hurdles when you enter into a new market. So how do you take the founder's vision and apply it here? So not all of you, Marcel, we can go back here too. Like not everyone actually, you weren't originally part of the original co-founder teams. Can you talk a little bit about how to take that vision and apply it into a new market?
Yeah, sure. So I think the one really important thing is that you very soon recognize that it's not necessarily copy paste, right? So I think there might be a couple of startups coming over and basically say, okay, we have this model that is working in Germany. Let's just do exactly the same thing over here. And that simply doesn't work. So the US is too particular of a market, a completely different regulatory environment, very different also customer expectations in terms of service. And so I think really important is that even though you're obviously executing on the vision that the founders have, you do have to recognize the local context and also be very open and transparent about it, and also then put your own kind of decisions and accents into the execution of the business model. So in our case, that meant really adapting our typical marketplace model that we have in Germany and doing a lot of things very differently. I don't want to go into technical details on the backend side, but there were a lot of adaptations that were needed to be made.
So if we go over to you, Maximilian, one of the things that Marcel just talked about was adapting to the different customer expectations. How have you seen what you started in Germany shift to customer expectations here in the United States? Talk a little bit about what you and your team have looked at.
So for us, it was very, very curious to see that the customer expectations were roughly similar, maybe like even more fitting our product in terms of like how customers are looking for convenience, how customers have a higher e-commerce penetration here than in Germany, and are a lot more willing to try out new things, and also how the new car buying experience in the US is a lot worse than in Germany. I don't know who tried to buy a car here, but I tried. It's not that great. For us, that was a little bit of a also one of the reasons why we went here in the first place and why we were very bullish on the US market. I think like for us also the main changes are in how we actually are able to offer our product. So we also initially thought maybe a little bit naively, hey, we will offer this in a very similar way compared to Germany. And I think that is the thing that most drastically changed over the past 12 months in how we approach actually bundling of financial services, of insurance, of how we do procurement here that is significantly different from Germany.
So just really quickly on elaborating on like the product. So how does that look different for the end customer? Because like you said, the car buying experience is maybe not as seamless here as in Germany, but how does that product look different for the US consumer?
So the product ultimately looks very, very similar to the German one. You can order a car in less than 5 minutes, a car subscription in less than 5 minutes online. You get it delivered within 5 days to your doorstep. And then you can simply start driving because we took care of all insurance, all registration, all taxes, and so on. I think the main difference comes to, on the one hand side, regulatory issues, and also then just like a very different market in the US around how do you actually procure these cars from OEMs, how do you finance them efficiently, and then how do you resell them ultimately after a subscription. And so for us, that really is the core difference. The product ultimately looks very, very similar. Like it's a 6 or 12-month subscription. You can order online. The customer experience is exactly the same. The subscription agreement is a lot more complicated. It's 21 pages. In Germany, it's like 7 or something. So that's, in my view, the key difference that we had to tackle.
So, of course, it's not easy entering a market like this. Partnerships, doesn't matter which market you enter, certainly true in the US, partnerships play a really big role. Or like, can you talk a little bit more about how you and your team has thought about the partnership model differently and what's been successful for you?
Yes. So I think it's 3 points that come into our minds when we think about the go-to-market. I think the first thing is pretty obvious. Just you have to do your homework, right? You have to look into the statistics, the surveys. Is the market ready to go? Is that the right point of time? Is the timing good? Second point is you can much better grow with partners, strong partners that are already connected in the market, right? And have access to the clients you want to go to. So for us, this was Visa as a US company, obviously. It's very easy for them to get us introduced here into the market. So partners and partnerships are a very important part because you cannot do everything on your own, right? With a small team from Germany. The third point, and this is also very important, is get something on the ground here. Could be like a POC, a pilot, an MVP, something that's happening in the market, because the market is looking at even if something happening in Canada, as was for us, it's still Canada, right? So get something live and active in the US market, even if it's just a small pilot, that helps to understand and helps to grow the market.
We have a variety of companies here, B2C, B2B, B2B2C. So maybe let's start at a high level with you, Killian, and then the rest of you kind of give your insights. So when you think about your strategy of entering the market, just from what you've seen from your FinTech or Deutsche, however you want to take the questions, up to you.
I'll mix it up.
What have you seen? How is it different when it's a B2C versus a B2B company entering the market?
So my thesis would be that it's easier from a B2B point of view than from a B2C point of view. Why do I think that? I think B2B has the advantage. You can play a follow your client strategy, which is not possible with B2C. With B2C, you need to look at the market completely. You need to check, is the market ready for my product? Do I have the right use case? Remember, that's much more risk. B2B, and when I talk about B2B, it's really mid-cap B2B and large-cap B2B, not the smaller ones. You can mitigate your risk in entering the market because you bring a client with you, which is sometimes paying your expansion plan. And I think that's easier. And the client is then also more or less the role of the partner, what Uli is already saying. And I think that is one advantage. The second advantage, taking on the more or less German view, I think German has a quite good track record in the B2B business. The real international tech-focused player in Germany are not B2C players, are B2B players. And I think that is also playing to the game, that this combination makes B2B, I think, a little bit easier.
Anyone else What's the difference of going B2B versus B2C in the US market?
I mean, I can talk a little. So we're doing both B2B and B2C, if you so will. So for those that don't know us, we're a marketplace for savings products. So we connect banks on the one side to individuals that want to save, and we bring them together on our platform. I would say the B2B part was the more lengthy one, obviously, right? What did help us is to have some of our investor base be based in the US, because those investors then recommended initial bank partners to us. We had those initial conversations. Deutsche Bank is an investor, and we're very grateful for them because they also keep on referring some of their banks in the network to us. And so I think that definitely gave us a head start on the B2B side. What I would say overall, it's also about being really scrappy and also getting your hands dirty in a way, right? Because my experiences in the US, people, do love an initial meeting. They also very open and friendly to then introduce you maybe to somebody that's where your proposition actually works, right? So your first meeting might not lead to it, your second meeting might not lead to it. But then if you continue to, call up people, if you continue to, annoy people on LinkedIn or via email and so on, at some point in time, you will have that first conversation, and that might lead to another introduction. And so I think for us, it was that two-pronged approach of both leveraging our investor base, but then also just, all of us getting into business development mode and trying to contact our first partners.
So we started the conversation talking about the fintech landscape in Germany. I think it'd be really interesting, and I definitely want your perspective on this, Killian, in a second, but I'm gonna start with you, Max R. Talking about neobanks. They're not new. Okay, obviously you said the stat, I was gonna say it for you, but you beat me to it on, the successful acquisition that Penta had and such a great success story. Another neobank that was on that, where did Alex go, that you had on your chart when you had N26, love Valentin, he just keynoted in Amsterdam, have the most respect for him. The challenges has been quite strong in the US with N26's entrance into the market. Can you talk a little bit about the neobank landscape in Germany, how that's different from the US, why it wouldn't make sense to come here next?
Yeah, happy to do so. Thanks, Scarlett. Sorry that I beat you to it. I'm still too excited probably about to mention that. I think the fundamental thing that, of course, in the neobanking sector, I mean, this is true for some other startups too, but it's of course the heavy regulation that you are facing. And I think in the European Union, we really started to try to harmonize the market in a way where it's starting to make sense, that it's in certain ways easier for national startups to scale in other European countries. I think when we talk about the US here, you often, I mean, of course, hear a lot of great examples who are doing it right, but often people think of the US as one country, and then they think, oh, that's easy. In the European Union, we have 27. Why not the US? Such a bigger market, just one country, but it's 50 states. And often, I mean, you just talked on Money 2022. When I talk to very early founders or people who have that in mind, they say, yeah, of course, yeah. Also the connection to the regulators is important. And you have the Fed, you have the SEC, perhaps they know, and then perhaps they even know the Department of Justice or something when it's not going that well. But then you just start asking them, so where do you want to start? And you say, New York, of course, fintech capital and stuff. It's like, so which authority are you talking to in New York? And they're like, well, why New York? And then you say, well, Department of Financial Services, did you have that in mind or something? And there I really think the sense for a European startup is not yet there, that it's actually a very scattered market in the US too. Also, I mean, B2C, B2B, certainly difference, but East Coast, in a way, I think fintech is there. But if you look at the big startups and the big ecosystem on the West Coast, they are now merging into this market. And I think that's the one fundamental, you'll probably hit this topic later, difference so far in Germany or European Union to the US. You have this huge ecosystem where there's a lot of money in the market. And to scale in every market, but particularly in the fintech market, you simply need a lot of money. And I hope we tackle the topic of funding at some point on this panel, because that's left, right, and center, I think, of the growth story and of a success story that you.
We'll definitely get to funding. That's for part 2 after the audience asks some questions.
Maybe to expand on that.
Yes.
So like we were told like, I think like 50 times that regulatory is a different beast in the US, and we still underestimated it. So I think like that's the crucial thing, that basically you have to, maybe not 50, but like 30 different regulatory regimes, depending on what you're doing. And lawyers are also not twice as expensive, but rather 4 to 5 times as expensive. And so I think that is, one of the complexities that people are underestimating.
So you're going to regulation. I wasn't ready to go there, but let's go there because I think it's such an important topic. And then after that, we'll pause and see if there's any questions from the audience and go back to part 2. What were you most, so you just said you underestimated it. What were you most surprised by when you thought about like the regulatory landscape of the US, and how did you overcome it?
So basically, the point where I was most surprised, we had a spreadsheet with, I think, like, let's say 35 columns and more than 250 lines to basically understand how the different regulatory regimes in the 50 states affect our product. So basically, how are we taxed? Are there any insurance regulatory issues that are affecting these? Is there any regulatory, like, are we classified as a lease or a rental product? Is there any proof of basically some laws that prevent customers from suing their leasing companies? Has this been circumvented in one of the states? And so basically this huge spreadsheet was very much a surprise to me, and also took us at least like 2.5 months to properly work through and resolve, and also understand kind of like what kind of product offering or what kind of like regulatory regime do we need to employ in the different states to be actually viable to launch and to also have an efficient cost base.
So this is a confessions conversation. It's ignore the live stream. There's only about 100 people here. We're a really intimate room. Anyone else want to talk about their regulation horror stories or things you were surprised by coming into this market? Maximilian, I love the 35-row spreadsheet. I can just visualize that because I've been there and done that. So I get what you're saying. Anyone else want to talk about what they've seen entering the market? Anything that surprised them from a regulation perspective?
Well, sometimes from my perspective, regulation can also be good, right?
Oh, yeah.
So because it can drive markets towards the right direction. Like, again, going back to sustainability, regulation is already there, almost visible, right? So it's not in place as to a full extent as we would expect it to be, but it's something, of course, also your clients are looking at and saying like, okay, in 3 years, this will gonna hit me. So maybe I should start moving right now before it hits me. So I wouldn't see it as, at least for our business, as bad. Sometimes it can also drive the market, and I think it's important also that it drives the market, because sometimes large players in the market are have their strong positions and are not really willing to move before customers and regulation putting the pressure on them. So maybe that's also a good topic.
Awesome. Questions before we keep going, because I've got questions for days, but I want to make sure you ask these experts questions. If you have a question, raise your hand. Nothing yet. Okay. We got one over here. Thank you, Alex.
So I'm Julian, working for Deutsche Bank FinTech. It's actually my boss over there. He didn't ask me to ask a question. That's a few questions.
Be prepared.
As you can hear from my voice, I'm also from Europe. One question I would have with you is that there's this image that the US are very pragmatic in their approach to business, maybe more so than Europe. And you mentioned just now about regulation. Once you've completed your spreadsheet and you've found like, okay, I need to talk to those people here, do you think that the regulator, once you have identified them, have a more pragmatic approach than in Europe, or would you say it's the opposite and actually Europe is very good? I'm asking about the spreadsheet, but open to other comments as well.
I think regulators are a lot more litigatory, so they are much more willing to enter conflicts than they are in Europe. So you can, my personal impression is like this is very much limited to Finn and no other experience, that in Europe you can lobby very well and people will try to get along with you, and basically you have a lot of administrative processes. But in the US, the risk is way more higher because you can basically get sued out of the market or get sued into insolvency. And so my impression is that you need to be a lot more careful about regulation and regulators in the US compared to Germany.
One other question, front and center.
Yeah, just want to ask about competition. I mean, the banking market particularly is totally different in the US than in Europe. You have in Europe a lot of saving banks, cooperative banking, so smaller competitors. Here you have the big beasts, basically. Do they squeeze you out of the market if they see this lucrative? And there's a lot of big American banks actually moving into fintech areas. So what's the difference there between Europe and the US?
I'm happy to kind of get started on this one. So I think what we see is that there is actually quite a bit of competition in the banking sector per se. And so we have around 10,000 banks and credit unions here in the US versus, I don't know, 5,000, 6,000 in Europe. And there is a trend towards a bigger consolidation in the space. And so when we talk to banks, we're also not one of those companies that is necessarily there to disrupt banks and kind of replace banks, but we work with banks. And when we talk to banks, they're actually quite grateful to have somebody that will help them kind of level the playing field. Because what happens is you do have these big guys, you have with the JP Morgans, the Bank of Americas in this world. And then you do have quite a large array of regionally focused banks, community banks, and those banks then often kind of lack the tools to play on the same field. And therefore, they're quite helpful or quite grateful to then engage in some of these partnerships.
I just want to add 2 points. I think it depends a little bit what the use case is where you're entering the market. When you go in the market with a wide offering like a neobank, which is wide, I think their competition is kicking in, and that's not easy to win that game. If you have a niche use case, as maybe also for the starting point, which is still big in that large market, I think competition is not so the problem. It's more than the problem to make wider afterwards, and I think that depends a little bit on what the strategy is.
Okay, I'm gonna take over again. I'm taking the reins back. But if anyone else has a question, I'll see maybe in the last 5 minutes if we can get one in. So keep them coming. Okay, let's go back to a bit broader fintech question. Killian, I'm gonna start with you. Where do you see the big differences in terms of the fintech landscape of what's really doing well here in the US versus what's doing really well in Germany? And why do you think that is?
From a product point of view, I think we should not take the assumption that here everything is more mature than in Europe it is. There's a lot of old-fashioned business here. There's a lot of companies who are in the market here since 20 years, since 30 years, which did not get any kind of disruptions. Also the large payment players here. Yes, everybody's seeing the likes of Stripe and the likes of Square, but there's a big payment business here, which is maximum old-fashioned since 30 to 40 years. And that's a tech game. That's again a B2B game, and I see there's a lot of potential to disrupt that. I don't believe that B2C again is the right thing to tackle here, especially not wide B2C, because in the marketing and sales, and B2C is often a marketing and sales game. I think there are some advantages here in the US. There's more knowledge in the US, and there's a different approach than in Germany, where you're more defensive and not so aggressive. But I think in the back end, in the legacy play of the fintech areas, could be payments and could be banking. I think that is the advantage.
Anyone else have an opinion on what? I'd love to hear from you, Maxar. What do you see working well in the US from a fintech perspective versus Germany?
I mean, I'm coming back to my topic. I think the amount of money you have in the market here, the ability then to scale, is simply a huge advantage for US-based startups if they want to branch out. If you think about, I had a hard time thinking whenever did a German bank, just to make this overtake a US financial player in the last 10 years. I don't know if something comes to mind. I have one example, Killian, from your former employer who at least tried to take over a card provider, but we all know how that ended. So the thing is that as long as you don't have the money to really scale your business on a large scale, you cannot provide the best product, because product is expensive. Good regulation, you said it, or to tackle a regulation is expensive. And I think that's the main difference, because as we heard also from what Christiana said, I mean, smart people, we have it on both sides of the Atlantic. We have good ideas for products on both sides of the Atlantic. But the thing really, I think that's fundamentally different is the access to money for startups, especially for, let's say, above Series B funding rounds. In Germany, seed funding, I think it's good. Series A, I also find it kind of okay. When you start hitting Series B, C, D, and then probably IPO phase later, this is where it gets really difficult. And this is what we see. I mean, what my former company, what we saw, but also what you can see in other areas. It's really difficult then to make this jump to become one of the big players. And this is, I think, it was also mentioned when you look at the last 20 years and the development in the US and in Germany in particular, you simply have money in the market from Google, from Alphabet, from Apple, from Facebook, from Amazon. There are a lot of smart people who had some good cash out opportunities, founded their own new startups. And this is money. I mean, money is never gone, right? That's the saying. It's always somewhere else. So it's better that it's in the system and it provides other people with the opportunity to really grow their business than not putting money in the system. And therefore, that's more a homework for, I think, Germany and the EU. Make it more easy to obtain money. And this starts, I think, at the top. Hopefully, in 10 years, we say, the people who founded N26 and Auto 1 and Raisin, obviously, and all the other great startups that we have, and hopefully some more that are on this panel, that they are the ones who started the wave of what is the PayPal mafia in the Silicon Valley or something. But I think that's really the number one topic.
But I think that's actually a reason to go to the US. So if you want to have access to that capital, you need to be here. Like a US investor is not going to invest in a European startup. But I think back to Kilian, what Kilian was saying, like, of course, consumer business is, I would say, more risky. And you need to be more risk seeking to pursue that path, in my opinion. And of course, there's a great risk that it does not work out ultimately. But if it works out, I think the payoff is really, really high. And it will.
Max, I have to just ask you this. So we're looking in our future gaze. We don't know what your next startup's going to be. I'm just assuming you're doing another one. You're coming to the US. Where do you set up shop? Which city?
In New York.
Why?
First of all, because I have family here, so it's always nice to be close to home. Second, of course, if you talk about fintech area, I think you only have, no, not true. We saw that great job that Atlanta is doing, and we'll see the same in Miami. But of course, I think it's still rather East Coast, West Coast. I think that is the decision, at least to start. Perhaps Atlanta and Miami will be third. But access is good. Here, at least, network. I think there's something we didn't talk too much about. Network and access to the people that you need to know. Therefore, I think, Max, you're also totally right, is something that's super important. New York has the access to big money. It has the access to everywhere you want to go. Everyone wants to come to New York, and they come to New York, and you can go from New York to everywhere. So I would still say East Coast, New York is the place to go.
I tend to agree, and it's interesting because in the last decade, I've been making that case since day one. I was an entrepreneur here, not in fintech, but still, it was all the focus was always on the West Coast, especially for B2C businesses, because a lot of the money there was more about scale and customer acquisition, less about revenue. So it was a little bit easier, whereas New York money was much more about show me the money and then I'll give you the money, right? Which is a little bit harder of a conversation. But let's just talk a little bit about, it's really nice because what we saw last week in Vegas, all the topics we're talking about, we're using the German lens, but these same things are applicable across the industry, regulation, embedded finance. I definitely have a question for you on that. We'll come back to it, but let's go over to you, Ulrich, because one of the things that started coming out a lot was around sustainability, and it is really starting to take front stage for fintech, for finance. A lot of the big financial institutions are talking about it. There's a lot more fintechs focus on it. Can you just talk about, from your perspective, obviously you are passionate about sustainability, how has that evolved over the last few years and conversations you've had, and how have you really seen it come to light front and center for fintech?
So coming from Europe and starting that, we have started that journey in Europe where the market was 2.5 years was already quite at a high speed. When looking in the Nordics market, looking in the UK market, so everybody was aware of the topic. And the market right here was like, I would assume like 2 years back. Now things have changed and things are changing, and we see that also the banks, the larger players are opening up for the topic right now. They are not really sure what to do. They are watching each other and who moves first, that game, right? But we have seen that in Europe too. So we moved from the challengers, right, that gave us all the credibility in the space to the tier 2 banks, to the tier 1 banks, right, where we are now at in Europe. And I think it will be a similar game here. What I find really interesting is that also the large players are opening up for FinTechs, which is very, very relevant here. So if you're talking to, just came back from a technology conference of a top 3 bank here, and they say like, we're moving into the public cloud, we are open APIs, so we welcome any FinTech. So, and if you talk to that bank, you can talk to 30, 40, 50, 60 million people. So, and that's massive. And that's where also FinTechs can grow without big investments in the market.
So there's a lot of big companies. In fact, if I go back to the evolution of the embedded finance book, and actually the moment that we changed our perspective in writing the book was when Grab announced their financials, and they had as much revenue from financial services as they did from their delivery business and everything else. So for you, kind sir Maximilian, are you a FinTech? How are you, or how are you not a FinTech?
So the answer is, I don't know. In many ways we are, because I think at the core is basically you have an asset and you make that asset available for somebody for a certain payment of money. And so in a way we are a continuation of leasing, but in also other ways we are a service bundling company. So I think we are probably somewhere in between, and the financial part of FinTech is definitely one of the core pillars of our company. We are extremely asset heavy. We have raised more than $800 million in debt facilities. And managing this complexity of the business is definitely a huge undertaking. And then making that into a product that a customer can consume that is for them not really a liability, but the access to an asset instead of basically gradually paying off debt and paying towards ownership, I think is overall a different shift that we are seeing in many different industries. So I don't know. I think like different people would clarify us as different things. But in my view, the financial aspect of the business is incredibly crucial to the success.
Yeah, it's interesting. We got a lot of feedback. So Shopify considers themselves a FinTech. OnlyFans, people are like, why is OnlyFans here? They have like the most robust KYC system pretty much in the industry. But anyways, so I'm just really curious to get your response on that one. All right, we are going to shift to talent. Marcel, you actually started the conversation talking about when you built the team here, you were the only German, the rest were Americans. I'd love to hear from all 5 of you on this one. I don't usually do that, but I actually want all 5 of your perspectives on that. Can you talk a little bit about, so clearly you chose to hire Americans, but talk about the recruiting process. What was different here versus in Germany? What were you looking for? Like, what was the secret raisin sauce that made sure when someone came on board, like they were the right fit for your brand?
Yeah, and I mean, maybe before I go there, so I would say, we hired very strong local talent, but we did also rely on our European parent. I think that was actually also really important for us, that we made a conscious choice around who do we hire locally versus where do we rely on expertise that we have from our corporate services, for example. So, our finance function is mainly in Europe. Most of our product and engineering team sits in Europe. They're also, much cheaper than somebody you would hire in the Silicon Valley or over here, obviously. Also, most of our recruiting function was in Europe. So I think that was kind of one of the first considerations that we had. And then in terms of the actual recruiting, what we try to do also really across Raisin is not necessarily only hire for a particular skill set, but also for a series of attributes. And also we want to make sure that people are very much aligned to what we see as our core values in the company. And so we test that very rigorously during the interview process. We also do case study interviews and so on to really kind of test the problem-solving capability. And so that's one thing that we do. And then the other thing that was particularly important for kind of very early on when we built our business and just got going was to hire a strong talent with an existing network in the US and particularly the banking space. So We have very strong hires in the business development team. What we tested for was, okay, can they actually, on day one, kind of call up, 50 banks and talk to them about how awesome our service is. So I think those would be a few things that we considered quite early.
There's a few students in the room. So when you talked about attributes, what are the key attributes you look for?
Yeah, so I mean, we call it, and it's we call it the raisin values. So every letter within raisin stands for a certain attribute. And so to name a few of them is, so one is responsibility for results. So to really make sure that you own a particular problem, you execute on it. You're not just limited to your silo, but you kind of, think across teams, bringing your insights really across teams. The other one that I really like is step up, challenge, and commit. So it's essentially a call to, not necessarily question hierarchy, but to always give your point of view, even if your manager might disagree, right? Or even if I don't know, it seems kind of super ridiculous. But it is a value where we say, please step up, please say what you think is the right thing to do, and challenge each other. And then in the end, obviously, once a decision is made, people commit. So some of these values we then test very explicitly for in the interview process. We ask for particular situations where folks had to, face these situations and how they then acted upon those and so on and so on.
Love it. So Killian, from a Deutsche perspective or from your previous roles, when you think about hiring talent across the globe, we have some of your team here clearly. Mm-hmm. What do you look for in the US versus Germany, or what do you see? Any key things you want to share from a talent perspective?
Yeah, I think also taking now the FinTech hat and not the Deutsche hat is, I think the most challenging thing entering a market like the US, but I think it's also true for the other large markets, is nobody knows you there. So you cannot attract talent by brand. So that means you need strong partners. You need networks who can open up the access to talent pool, because the normal ways to recruit people will simply not work. And I think that's the biggest challenge. And to tackle that, that's an advantage where you have a brand. That's also an advantage when you really are established also in Europe, because then you maybe have some spillover effects to the US. But entering too fast such a large market, it will be very, very hard. And then the approach you said, and I think that's totally true, to start with local people. I think that's true for a lot of international expansions. That's not special to the US. Try to expand to France without speaking French. Good luck. But I think that's really the conflict, because sometimes it's easier to send over people from Germany to the US, build the market. That's easier, but I think not really a successful approach.
Let me just add, and I agree very much with what Killian said about the networks again. I think when I worked with the NYU Pollack Center here in New York, what I thought was incredible what the US universities really do to establish already contact between their students and potential employers. Because, I mean, of course, you have the more private model of education in the US, perhaps than you have it in Germany with also a lot of public players. But this was really outstanding. There were job fairs. You had presentations from companies in the schools. And I think this is something that adds on to no one knows you here. If you are late or you want to enter, those best students, they already had probably 5 interviews, 3 summer schools, what do I know, with whatever kind of companies. And there then you have to get in to say, but we are new, we are better than what you already know. And I think that's very tough. So therefore, I think starting with a partner in the US is essential, and especially starting with education partners. I can just say, I think is tremendous. And Alex and I talked about that. And of course, I will establish that with NYU, where I really say one of the best universities in the world, to have this connection with the local universities, because this is where it's easiest to get some great interns, because we all know how much value a great intern provides to you, because he or she might come back the next year and the next year thereafter. And once they graduate and they liked what they did, they will start working with you. You don't have the risk to hire someone for a lot of money that you don't know.
So for Ulrich and Maximilian, let's start with Ulrich and then go over to you, Maximilian. Obviously, how are you thinking about recruiting and keeping the culture true to what you started and now over here in the United States?
Yeah, I think it's a big, well, it's a big topic and it's a big task. So we're part of an NYU student program that really helps. So we already have some students on the ground here. Amazing universities in general for the US. I think you're totally right. It's a very good approach to cover that scaling and growth factor and more junior positions maybe. So and getting a brand out there in the market also, which is difficult when you're not there. You're not like, who's that, right? So partnerships can help a lot. I think the other thing is that I agree with Kilian that native people are really necessary, but you can't leave them alone, right? So they don't have the culture, the heritage, they don't know the product. So what, from my perspective, is important if you want to cover that market, you have to get at least some of the founders on the ground. You have to get some of the European team on the ground, and that they both together with a native, native salespeople, that they form like also a culture, let's say, bubble that goes out into the market, because otherwise you cannot control what, this guy is well connected to any bank, but what's he actually selling, and what's, is that going in the right direction, the wrong direction? If you do that with virtual calls from Europe, this will not be working, right? So both founder commitment, Europe commitment, and native people on the ground, I think that would be the way to go. Still, I think one of the biggest challenges for European companies is to get also the investors, especially when they're Europe related, to that amount of money, right? Because if you look at the salaries here in New York, I mean, this is something where, I mean, we understand, right? But some European investors hear that for the first time, and it's just amazing for them, like, okay, these are like the salary of 3 founders combined, right? You're giving that to the person, but she also needs to deliver, right? So that's a struggle, I guess. So it might be better to have US investors on board that get the market.
Yes, I have team everywhere from Singapore to San Francisco, and it's so different when you think about the local market, salary, how do you make it work across it, and then making sure that the DNA of the company is naturally throughout, but then equally that it can be applicable to the Singapore team versus the London team versus the Madrid team. Maximilian, what about you? How have you thought about that? How have you thought about, because you're a co-founder, this is your baby. How have you thought about it as Fin has scaled and making sure the culture is still yours, but then also is the American version of that culture?
So I think like I see some things probably a little bit different than Max and Kilian, because for me, hiring has always been outbound. So hiring has for me always been very, very similar to sales. In terms of we are getting probably 60 to 75% of our hires by active sourcing. So we are outbound all the way, and we write people on LinkedIn. Sorry if I have written everybody in this room or someone in this room a LinkedIn message. I'm sorry about that. It might not have been me, so we are really, really aggressive like just active when finding the best talent, because the best talent does not apply. Like basically, if you look at the best people that I've ever hired, they had multiple offers already on their desk when they signed the offer for Fin. And so for me, it's like more outbound perspective, and then of course selling through the process. And that selling process is a little bit easier if you're well known. When it comes to culture and DNA, that's of course incredibly difficult, because there's just this stark contrast. Like in Germany, we are 300 people. If you go into the office, you have this amazing vibe. It's really, really cool. Everybody's super excited. There's a great just energy in there. And then you come into the New York office. We are fairly distributed in the US. Work from home is more a thing here. And you get into this giant room, and there are a couple of people, but the energy feels vastly different. Mm-hmm. And simply starting from that, it's very, very curious on kind of like, how do you build up a culture that is effective? It does not need to be exactly the same. I think the values, the underlying core needs to be the same, but in how you are living that and what tools you are using to basically bring these values and that core to life, I think can be actually different. And we tried that a long time without the founder present by hiring very senior executives, people with basically more professional experience than I'm old. But that is very, very hard for them to scale and implement a culture that they've never truly experienced. Mm-hmm. And so that's also one of the reasons why I'm here to also foster this culture and be a little bit more also of a cheerleader and seeing how can we promote that and how can we establish that internally.
So again, there are students in here. Now I'm curious. First of all, getting a note from a CEO of a company, even if they never heard of you, is a little bit of a different thing versus a recruiter.
100%.
So who are you targeting? What are you looking for? What words are you looking for?
So we are looking basically for vastly different profiles. So I think initially we aimed for a lot of senior profiles, and probably a lot more senior than always what we've hired for in the US. And we always try to hire for kind of like the challenge in the next year, so that the people have kind of like a head start when they start into the role, but after half a year are really getting challenged and can really kind of like show whether they can grow with the company or not. We are hiring across university graduates that are just getting started and are very, very smart and talented and driven, but also across like CFO comes from JP Morgan with 14 years of structured finance expertise in debt capital markets. Like I think it goes throughout the whole spectrum.
So you made an interesting point around culture. So we'll do another fast draw. Okay, so 1 is work from home, 2 is remote, or 3 is hybrid. Because you talked about the difference. Same thing for our team in Europe. Very like you go into the office, it's covered with people. We're having a really hard time getting the same thing on our New York team.
Yeah.
So I'm curious, for you all, you've all been leaders of your organizations. Many of you are still. What is your ideal? Is it work from home? Sorry, I changed it now. Work from home is 1, 2 is office, or 3 is hybrid. What is the ideal work culture? We've got 2s and 3s. Okay. We don't have time to go through all of those. I'm just curious to get a quick draw. Okay, last question, and then we can hopefully have one from the audience because you all get a break. Okay, so we can do the audience one first, Alex, and then I'll ask my final one if that's okay. There's a lady right behind you too who had her hand up also. We can do 2 questions. That's fine. As long as Alex is okay with it.
Thank you so much. My name is Zainab Aragib. I'm from the German Central Bank. Actually, I had a different question, but you spoke about recruiting. I would like to know, how do you hire diverse? I know we are going to talk about female fintech, but I would like to know from you 5, how do you hire diverse, not only from a female perspective, but also other aspects of diversity? Thanks so much.
Happy to start. I mean, I think that's not different on either side of the Atlantic. I think the US might have started with diversity, making it a topic a little earlier. But of course, it's part of the culture. I mean, you need to build a company where you really believe in that diversity is a strength. And then you should hire, for the first of all, also people in the HR department who believe the same. Because I think this is something that, of course, is something where the founder or the managing director or the executive level really needs to believe in, as tone from the top is, of course, important for all these kinds of topics. And just to mention that, because ESG was mentioned so often here, the S in ESG stands for social, not for sustainability, what a lot of people think. So therefore, actually, I think part of ESG compliance also for regulated institutions is diversity. So what, for example, we did at Penta, I mean, we had a clear, always data-driven model. We also started off in Berlin when I joined as a managing director, already with a very high level of diversity because of all the assets that the Berlin market provides, that Alex said. But you need to make sure that this is something that continues. And I, for example, for the departments that I oversaw, made sure that we had diverse people in leadership positions also, because I think this is one of the most important aspects. And there was a great survey just this morning, I read about it, how little girls want to be a leader. There were 18 questions. What is important to you? To be a female leader was ranked 18th of 18 options among young girls in a survey in Germany. And I think the main reason is you don't want to be it if you don't see it, right? Or you can't do it if you don't see it. And therefore, I think a company needs to make sure that you show not only growth potential, but also perhaps via direct hires of senior people, that you have diverse people in the leadership positions. And I hope that then this survey in 10 years from now will come out completely different.
Anyone else want to take that?
I think it's ultimately a funnel problem again. Like basically what you're saying, like you look at your employee body, then you look at your middle management, then you look at your senior management, and you basically are. I'm a big fan of hard targets there, because you can also influence these via recruiting and so on. And if you do a lot of outbound recruiting, you simply only write women on LinkedIn, and so you basically fill the application process with women or with other diversity criteria that you might have. And then you have hard requirements of kind of like basically each department, each hiring manager needs to go to a certain level in this field that is better, significantly better than the market environments. And yeah, I think ultimately it's a matter of like how committed you as a team are towards these hiring goals. And only if you set yourself very strong KPIs and adhere to them, you are able to transition your organization to be more diverse.
And as you hire more diverse teams and their network, it's a network effect, right? Like your network is going to be reflective of the energy and environment, and as you hire people who are outside of that, then they're going to expand their networks. Over to you, sir.
Thank you very much. Adam Schneider from Oliver Wyman. Scaling to me is also a revenue question, and we haven't quite poked at that. So for those of you that are consumer, B2C, because that's just the question that comes to mind, you grew and trained in Germany and the EU with a certain type of consumer. You come to this set of crazy zip codes and they're very different. How did you adapt? Because that to me would be really interesting to hear the growth story there.
Yeah, so I think maybe to start, I think one thing that really surprised us is how much customer acquisition costs differ between Europe and the US. And and then it becomes a question of what indicators do you actually look at, right? Because in our case, for example, customer acquisition can be twofold what we would pay for a customer in Europe. However, then in our model, if you look at the average deposit sizes of customers, they're also almost double as what we see in Europe. And in that case, we might move away from just saying, okay, we just look at CPAs. We might consider different metrics, really then adjusted also to the average ticket sizes. But I think there is an initial sticker shock in terms of what you see when you want to go out and acquire customers.
How is your revenue quality, so like profit margin basically compared to Europe? Is it also worse or?
So overall, the profit margin is actually better. I mean, we're still somewhat early, right?
Yeah.
So we've been really on the ground now since a year or so. But kind of net, we pay more for customers, but then those customers are also more profitable. We will have to see how it is over the long run, obviously, right? But the initial indication is that it's actually better than what we see in Europe.
That's really cool.
Anyone else want to answer that?
I mean, exactly the same.
What about marketing? Because obviously you're talking about CAC a bit. Like I was talking to one very well-known European neobank about entering into the US, and they started talking to me in detail about their marketing budget. And I know very well because at BBVA we bought a neobank in Simple and spent a lot of time. We were building out ASLO on the SMB side. Anyways, I know what the marketing budgets look like, and they weren't even close to the ones that they needed in the US. So have you found that similar? Obviously, marketing is part of the customer acquisition cost, but what have you found on that side?
I think in Germany, you often have a very different marketing mindset. You have a very performance marketing-driven mindset. But in the US, many companies, like specifically also the kind of like emerging D2C players, have a very brand-driven marketing mindset. And I think in the best case, this brand-driven marketing mindset can work very, very well. But you also need to think about like how do you transition towards this very different market in terms of also your marketing approach. So I think this is actually one of the key challenges where you actually need to look at like how are you actually defining your brand and your name in this huge market. I think it's one of the biggest differences between Germany and the US.
Okay, we have time for one more question, then we need to do a bio break. I'm sorry, I'm going to ask you. There's so many good questions. Where were you earlier? There was a whole line here. You mentioned this, Alex, when you were talking about DeFi and the fact that there's so many opportunities in Germany. It's so interesting because I had a private dinner with a handful of the biggest banks, biggest FinTechs in Vegas last week, and one of the things we were talking about is like, will DeFi be big? How is it going to look? What will it look like? And Germany was mentioned 2 different times because of the engineering and the mindset there, which was just fascinating. So we're going to put the future hat on for a second because DeFi is here, but it's future. You know what I mean? So let's go around. What does the future of FinTech look like? This is your last time before we got to go do a bio break and refreshment break. What is the future of Mr. FinTech? Do you have an opinion on this?
Yeah, obviously there will be a bright future on that. I think we will see different evolutions, not revolutions in the FinTech side. And I see DeFi not as changing everything, but enabling a lot of new use cases. And we see FinTech models now tackled for the second wave of FinTech, which we've been there for 10 years. So we are tackling our own models. I think that will happen over the next years.
Your watch is telling you to stand up. You've been sitting for too long.
Yeah, that's.
Marcel.
Yeah, so I mean, in terms of DeFi, we as Raisin over in Europe, we also dabbled our foot, or we moved into the crypto space a little bit by offering a crypto offering. I think there will be a couple of waves in that space, and I'm really looking forward to increased regulation also. That just gives us more clarity and will then also, hopefully lead to new business models emerging in this space.
Maximilian's eyes just got big, like increased regulation. I already have a 34-page spreadsheet here.
I'm already paying so much for lawyers. I like that. That's probably where we are the farthest away from. So I have like a enthusiast's opinion. I think like I often compare DeFi to kind of like early days of the internet. What people are doing nowadays, they are just like bringing offline stuff or like internet stuff to DeFi. And I think the true innovation, like basically business models that are not possible without DeFi, we have not fully seen that yet. And I'm really, really excited to see what people can build on these platforms that is truly impossible somewhere else. So probably not as much towards cryptocurrencies, but kind of like the deep tech technologies that are emerging now. And I don't know like how soon that will be, but I'm very, very excited to see there's some innovation.
I think all FinTech products will become commodities. I think the only important question for regulated FinTechs banks in the future is how do you target your market? How do you target your audience? How do you find the niche or the breadth to really get the most revenue? Doesn't matter which technology is used. I really think it will be something that you have. Whatever kind of financial product it is, you sell it, but you need to be a marketing expert to be successful.
Yeah, good thesis. So I hope the future of FinTech is a lot more sustainable, a lot more about green FinTechs. I believe also that FinTechs will be embedded in the current infrastructure. So also with the big players. So I think FinTechs will be part of that overall infrastructure that's changing. And they will have all the new stuff coming in, but it will be a mixture. It will not be only DeFi and nothing else. It will be just a hybrid model, so to say, and with a lot of FinTech knowledge and disruption embedded in existing systems.
I want to keep going, but we need a bio break. So we have 7 minutes. Is that accurate, Alex? 7 minutes to go grab a snack, get a water, go to the bathroom, and then we come back with the startup pitch. Thank you, gentlemen. Appreciate the conversation.
Thank you so much.
Okay.
Yeah.
Am I staying?
No. Okay, you tell him 5 minutes, right? Yeah? Okay.
Oh.
Otherwise, people won't.
Thank you.
I spilled coffee as I walked. Thank you. So nice meeting you. Nice meeting you. Nice. Nice seeing you in person. Can we turn this off?
Yeah. Yes, but this time it's the pitches, so they each go up individually. So I think they will just.
But they're done, right? The speakers.
They're done. Yeah.
Oh, you went away?
Oh, it is locked.
Yeah.
Sometimes.
Take a short expression break. Get people excited.
Ja, schade. Aber ich hoffe so, dass ich dir ein Zeichen gebe, aber dann nichts sind. Not for, we need four for the investors panel.
Switch Session und da ist noch mal ein Network Break oder ja, also vor die Diskussion nicht.
Geht der 30 Minuten läuft weiter?
You're sitting the one with the microphone. Ja. I don't have a thing. What's up? Oh, for real? Yeah, that's they had an artist come. Interesting. You need a pad. That's the one thing.
Oh yeah, that'd be good.
Yeah.
All right, let's get back into the room. It's a tougher job, actually. Whew, need a gong next time. So I know lots to catch up, and we have still, pretty much time later on in our reception with nice beverages and snacks. So we have, a bunch of time to catch up and also, discuss with our upcoming startups who will rock the stage. So before we start, Jesse is missing here. Okay. You have this microphone to share. So before we start, we want to give the startups a little bit of a tough job to get challenged on their road to the US. And please do so. Honesty is really important for them to really make it into USA. We heard before in the panel, it's a nut to crack, really, to get into the market. So they appreciate your feedback on their roadmap. So thank you for coming. Just want to have you just say a few words to yourself and what you do. So Kiswana, please grab the microphone and just say a few words. Thank you for being here.
Of course. Hello, Kiswana Brown here. I work for Newark Venture Partners. I'm an investor. We're a $90 million fund investing up to $3 million in seed stage startups. Excited to be here.
Jess, Morgan, yeah.
Hello, everyone. My name is Morgan. I work at B Capital. We're a global multi-stage investment firm with over $6 billion in assets, and I work on our early stage fund. It's called the Ascent Fund, focused on seed Series A startups. We're a $255 million vehicle. Thank you.
Great.
Good afternoon. Luke Timberlake, a general partner with FinTech Ventures Fund. We, as the name implies, focus on pre-seed and seed FinTech and have a $20 million fund that we're deploying out of currently.
Thanks. Jesse Podell. I work for Ally. We're a bank. I run the CVC, Corporate Venture Capital, and excited to see everyone and give my own opinion, not the opinion of the banks. Thank you.
Great. Thank you for being here. And thank you also to Brian from Venture Out. He's the guy who brought you in. Really amazing. Thank you. How are we going to do it? Actually, 5 minutes of pitching. Yeah, really? I cut you off. 5 minutes because we had it before in Atlanta and it worked out. So actually, different story. So 5 minutes and 5 minutes Q&A. But also if you have still some time for one more audience question as well. So let's get started. So first startup, let's have Konstantin on stage.
Thank you very much. Yeah, my name is Konstantin. I'm one of 5 co-founders of Kadea, a Berlin-based B2B fintech startup. And the next 5 minutes I'd like to take to talk a little bit about the challenges in debt capital markets. So the challenges that participants in debt capital markets face and what we have developed at Kadea to soothe the pain and tackle those challenges. So the US debt capital markets amount to a staggering 50 trillion in product volume outstanding. But processes and workflows in debt capital markets are still highly inefficient, they're slow, and they're manual. And as an example for the inefficiency, there are still 10,000 pages printed each year per employee in traditional investment banks, which is not only expensive, but also highly unsustainable. And for a normal securitization transaction, there's still 18 parties involved, and they are not coordinated on a single platform and with like a streamlined communication tool, but they are still having their own silos, data silos, communicating then through email, phone, or sometimes even fax. A nightmare. So, and more than that, processes are still slow. So you have still settlement times of up to 2 weeks, 14 days, and a loan portfolio review sometimes even takes up to 3 months, 12 weeks, simply because data is not standardized and sometimes loan data is not even digitized. Moreover, as we can see in the cost base of financial intermediaries and investment banks, processes are still manual. So 75% of the costs of a bank are often due to HR costs, and 3 out of 4 employees in banks and financial intermediaries work in back office. So they are doing all the heavy lifting. And that's also why Accenture found that there's like a saving potential of up to $200 billion each year in debt capital markets simply through digitization and automation. And that's why we have developed a digital service platform that brings together issuers of financial products such as bonds, securitization transactions, or also loan syndications, their investors, and all the services providers that are involved in such a transaction, being a paying agent, a trustee, a scoring agency, a scoring provider, a rating agency, and so on. And they all work together on one platform that then also automates the processes from start to end for different products along the whole life cycle. And our tech stack looks like that we are able to integrate with traditional infrastructures to handle traditional loans and also bonds. But also we have developed a proprietary smart contract engine that allows us to create digital products on a ledger of choice, but also to service it along the lifetime and also to distribute payments on that. So we have a hybrid setup. Sorry, we have a hybrid setup that allows to transact in both worlds. We have already showcased that we were able to cut costs and also back office work with our platform during the first transaction that we executed together with a partner, Bank Frick from Liechtenstein. We had the first fully blockchain-based loan securitization with them at the end of 2021. And there we were also showing that it is possible to settle in real time with an atomic swap and to cut out several intermediaries that usually would also charge. That allowed us to then also increase yields for investors and simply make the product more appealing to investors. So where are we? We are at seed stage still, currently developing our standalone platform. And there we charge issuance and servicing fees on the volume that is serviced and issued through our platform. And we also sell value-added services. But next to that, in the next step, we will also offer the platform as a white label solution. And as a vision for the long run, we will soon then also connect those white label platforms to an interconnected network of platforms that then allow those white label operators to offer their services across their own platform also and share also user credentials with other platforms in order to increase also placements, the placement volume. So, and why we already want to go to the US? We are still at seed stage, but we still think about going to the US already, simply because the market is twice the size of the EU. Also, issuance volume in terms of products was 3 times the one of the EU in 2021. And corporates in the US, 60% of them use debt capital markets to finance themselves. whereas in the EU, it's only 20%. So simply, the market is bigger, it's less fragmented, it's highly innovative, and you simply have a different risk culture. Where are we now? As I said, in 2021, we received seed financing, and we also received R&D funding from the EU and the Berlin Senate for our proprietary smart contract engine. And with that, we built a strong team of 10 employees with a combined market experience of 120 years in debt capital markets, structuring, finance, compliance, and legal. And we have built with that also our proprietary technological platform, executed a landmark executed this landmark transaction, which also received quite some media attention. And we built up a 5 billion deal pipeline, which will be executed within the next 18 months. Also, we managed to build a reputable partner network of, for instance, one regulated securities exchange in Germany, a Big Four audit company, and also a global asset servicer. And we received the nomination for the FinTech Germany Award, which will then be also assigned in December 22. So now we are asking for 3 million to execute the deep pipeline and build the platform to the next level. Thank you very much.
So we have 5 minutes between all of us. Yeah. Okay. I'm just going to give some feedback, and then I'll let the others ask some questions, because I have I spent 13 years in institutional capital markets, so I get the space. My feedback for you is you spent too much time talking about the problem. If you're pitching somebody who's trying to fund something in capital markets, they already know all this stuff. There's a very small subset of investors that are going to touch this stuff, unless you're just going for the blockchain thing. And that, to me, I think you buried the lead on the blockchain thing. Meaning, I would just be right up front. Blockchain's huge. We actually found a way to integrate this into the workflows of this massive asset space that we all know and hate, because it's such a pain in the ass on the back end. I think you should have started with the team. Say, like, this is the team that's uniquely positioned to both build the stuff and integrate and knock down doors and get it into the big banks, like into investment banks. I heard nothing about the team. I thought your revenue model was a little wishy-washy. I think you should be really upfront about that too. And my last comment is, and by the way, take or leave any of these comments. This is just one person's view. I think it would make a lot of sense if you showed initially just what it looks like. Hey, here's how it works. Like, here's the front end, here's the UI, here's what happens on the, even if you're going to try and start fundraising from like blockchain people, like, here's what the smart contract looks like, here's how it's inputted. Like, I want to see all that stuff. So those are my comments, and maybe we can touch base later. Okay.
Thank you very much.
Congrats on your progress. In terms of how I would look at it, and you do talk about the number of back office staff that are there, but I think the key in the pitch is their buy-in, because a lot of people don't want to have their jobs replaced. And so I would actually focus that as part of the pitch, because as Jesse says, a lot of people that you're probably pitching to are blockchain and or capital markets experts. So really focusing on that is important. And then also making the distinction between, is it a reduction in labor costs in terms of you're reducing people, that's fine, that's one thing, or is it you keep the same number of staff, but you can do 2 to 3 times or whatever that number is in terms of new transactions per, XYZ timeframe. So I would focus kind of more on the nuances when it comes to that. And the second would be really think about the competition. I mean, there's Figure, there's a few others, but is it a CLO? It sounds like it's not, mortgages, et cetera. Really thinking about that, and then addressing the competition and why you're better, because you are, the second mover, which is not a bad thing, but you need to spend time explaining that, because most people are going to want to dig into that as well.
Thank you.
Great work. So I actually have just a few questions. Given that your customer segment, of course, is financial institutions, one of the main things in technology is the fact that they have a legacy infrastructure. So curious to know, is this something that would need to integrate with existing infrastructure, or would it sit on top, is one. And then two, how do you convince folks that are already using whatever tools that they're leveraging to now stop and then go into like your platform?
Yes, of course. So it sits on top. We have connection through API, but also through a web interface. And we are currently working on an on-premise solution for those that do not want to use the web interface or the API. So that's the first question, or the first answer. And can you shortly repeat the second question?
The second more so is just on folks just being used to leveraging whatever technology that they have. So how do you convince them to now use yours specifically because it's collaborative? So you would need to have all of these parties engaged in order for it to be fully efficient.
Currently, we just give them an intro and about our platform with the platform demo, and also offer them free usage, so they can play around, test the platform, and if they feel like it is of advantage, if it's better than what they usually use, then we are currently discussing with them tailored plans. So we are still in the very early phase.
Thanks.
Thank you. And just 3 points of feedback. So agree about the revenue model. I would give specific numbers if you have them, so I can get a sense for, okay, there's, it's a $50 trillion space. How are you charging? What's the percentage? How does that translate to your top line? So I can get a sense for TAM from a bottoms up perspective. Second, you referenced the 5 billion in pipeline. I'll make it quick. Give some more detail there. Like that could be really exciting. What are the logos? What are the estimated contract values? Build some excitement and credibility with that slide. And then the third is Bank Frick, did this pilot with you. I guess this is a question/comment. Are they going to be using you as a paying customer? What happened after the pilot?
To answer this quickly, they are a transaction bank that don't have such a big loan book. They're invested with us, so they are a partner, and they helped us to carry this on as a pilot transaction. Now also talking to partners of them and offering them as a solution. But there's no follow-on transaction because they simply don't have that many loans in their book.
So they're an equity investor though in the company. So I would mention that too.
Okay, thank you very much.
It's really hard to put everything in 5 minutes. So great job. So
thank you. Yeah, 5 minutes goes really fast. Okay, so again, as Jesse said, I think you guys know that women are falling behind when it comes to investment, when it comes to savings, when it comes to really attaching themselves to their insurance in order to move themselves forward in financial independence. It's a huge market, though. It's the fastest growing and most underserved target audience in consumer finance. So a few stats there, but I will move on and we can come back to that if we need to. The FinMarie approach is one that really goes to the personal. So we are moving in education, in community, and in handpicked tools, very much like what Raisin does, to engage women with their financial futures. The space that we play in has some validation in the form of companies like Elvest, companies like Female Invest, but we are further over into the space of lifecycle tools, more like personal capital. The launch in the United States is something that obviously we can't afford to do at this point, but we are here because we want to make these connections, because partnership is absolutely essential to what we do. Essentially, much like the Raisin model, you need to have those kinds of partners to roll out in the United States. And so really we want to establish early connections right now to develop a US business office and piggyback the skills off of the German team. We have a product and service portfolio that's already making money. Now we're working more into how do we scale that more? And that is our next step beyond seed to move into more revenue that is recurring revenue. So we have revenue coming in from both the younger audience through subscription model and the older audience through assets under management. We've grown our assets under management in an impressive way. And I think that we have a really good market saturation for our brand name in Germany. And that is something that we want to extend both across Europe, because we can currently serve all of the European market, And then, of course, in the United States, brand recognition will be really very important. You can see we just published a book in Germany, so if you're interested in that, it's also available on Amazon right now. The team that we have is extremely experienced. I helped establish Fresh Direct here in New York. My co-founder, Carolina, was former Deutsche Bank for many years. And Rika, our head of marketing, was the lead of brand for Coca-Cola across Germany, among other brands. We also have a lot of really talented developers and designers working with us on this. Our in-house development team is really doing all the work on the back end. For Series A, we really want to focus on a GPT-3 enabled chatbot. And so that's something that we want to test with our audience. It's had really early good reviews, and then custom algorithms, similar to what Ellevest has been able to do in the United States, plus predictive analytics. So we are looking for a Series A to expand. Obviously, you need a lot of money in a consumer field. And so this is our goal, really, to achieve 4 million annual recurring revenue in the next 24 months. I am really happy to take questions because, again, this is a quick pitch, but the thing that I would ask is for if we can talk afterward, make some connections. We are happy to connect with everybody here and to see if there are partnership ways to move forward. Thank you.
Yeah, so thanks for the presentation. I think you made some great progress. So as you probably know, when it comes to autonomous finance, especially investing in the US, the folks that really made headway, Betterment and Wealthfront, but then they moved from expanding, from just not only offering investing, but also expanding into lending as well as saving.
Absolutely.
So then almost become a little bit competitive with the neobanks like Chime, for example. And then the next wave was more so folks coming in, offering personal financial products to focus on customer segments.
Yes.
And then you have teenagers like Step, for example, but then not too many are actually focusing on the women's segment. However, as you mentioned, there's Ellevest. So on your slide, you briefly saw that you kind of had Ellevest separate in a different quadrant than you because of something called the life cycle.
Yeah,
So it would be great to understand that and what your competitive advantage you think would be not only to those female-focused investing products, but also just the general scope of investing products.
Yeah, absolutely. I mean, I think Ellevest is great. Again, validation for the fact that the market is here. They've just done their Series B at like 53 million, and the level of assets under management that they have and customers, especially high-end net worth customers, is absolutely a reasonable target from what we can see. But you're right. We do sit over in sort of the financial lifecycle management section because one of the things that we've really noticed is that it's more than just investment. It's really touch points from savings all the way through to insurance. And so that is slightly broader than what Ellevest does. Ellevest is really specifically focused on converting people into investment. Whereas one of the things that we've noticed is that once you have a woman's trust, they are willing to go with 3 to 5 financial products with you.
Great job. I think there's a few specific points, but the overall takeaway for me was it seems like you're doing well, but I think you kind of like skipped past some of the metrics that perhaps would really highlight that. So I did see some graphs that were going up and to the right, like this one. I saw.
Yeah, exactly. So we can, I guess, point out to the clients who are investing versus if you want to look at what Ellevest was doing when they got to their Series B, it was 100,000, just over 100,000 accounts, 125 high net worth clients, and then what we're doing at the moment is we've got about 500 clients investing with, at this point, where is it, the assets under management? Oh, it's on a different slide, but we are about 6 million in assets under management at this moment. So yeah.
Okay, got it. So metrics. So I think maybe just the presentation or slide feedback is to, have a slide or two that really gives the investor like the key metrics up front. Because after listening to your presentation, I wasn't sure what your revenue actually was, how many users you had.
Right.
I saw some metrics again that looked positive.
Yep.
And so just highlighting that to make sure you got to repeat it maybe multiple times. Yep. Because it does sound like you're getting a lot of traction. So just make sure that the audience leaves, understanding that.
I agree. It looks good, but yeah, and also giving the right framework because you're not going to have the same numbers as like a gaming application. You're going to have financial application numbers.
Congrats on everything so far. In terms of this slide, for instance, I'll start there. I would like to see what the improvement is versus the status quo. Are your clients not investing at all? Are they investing XYZ times more? Are they spending 7 minutes versus 0? That is even more powerful than these numbers, which are obviously pretty good. And that would be something that it makes it even more powerful. The second thing obviously would be relating this because it's a personal thing to you and starting with that story because this is not detract from Fresh Direct, but I wondered how you got from Fresh Direct to here, even though I can probably infer how you got there. But I think that would be interesting to understand and start with that because it even helps develop a personal connection with the audience as well. So those are two of the pieces of the feedback. And the third piece would be just for a seed stage company, and you're very candid, which I always respect that, you need more resources in order to do things. But I would argue that even if you go back to the slide where you have several different types of products, you almost have too many products that you're focusing on currently. And, sure, you can have those in the back burner, but, for where you are right now, you only need 2 of those. And it almost seems like you're trying to do too much at once, which I know you're not, but people can read it that way when they, let's say, look at this slide and haven't heard you pitch it. So good job. But those are some of the nits that I have in that regard.
I absolutely agree with you. And I think what we're trying to highlight here is moving really to recurring revenue from that kind of one-time revenue. But I think that's the story that we move to a Series A.
Yeah, I know we're short on time. I'll just leave you with something to ponder. First of all, I appreciate your sort of like, I'm here to connect. That's great. But just in closing, I think, you have 500 paying customers, like become the household name in that region before you even start thinking about coming to the US.
Yeah.
I would take it off the slide. Say, we just intend on becoming the biggest thing ever for women in Europe. That'll be good enough. All right. Thank you. Thank you for doing this.
Thank you.
So Thomas. Oh, change the order. So sorry. Okay, being spontaneous here, Peter.
All right. So, hi, I'm Peter. I'm CTO and co-founder at Ultimate Money. So usually I don't give pitch presentations, so I'm taking care for the technology. So please don't eat me. So we heard a bit about DeFi already in the morning, or like a little bit earlier today. So who of you has heard about DeFi or read a little bit about it? All right, quite a few. And who would consider calling yourself an expert? Okay, almost nobody. So then you should fasten your seatbelt and listen to my presentation because the product I'm going to present to you is exactly for you. So imagine that you can become a market maker, kind of like earning with dealing on marketplaces, or executing transactions like banks do and earn transaction fees with that. So there's this fascinating technology called the blockchain that's open, permissionless. It's a global infrastructure. I always compare it in front of finance people and bankers. It's like a global core banking system that's open to make transactions and to onboard users, but it's also open to build applications on top of that with so-called smart contracts. And these smart contracts are going to handle financial services in the future. And so also in the panel, we heard about FinTech and kind of like what FinTech achieved. And I see it like Killian explained it. that kind of like fintechs always wanted to really like change the world and really whatever, like get rid of the banks maybe even. But in the end, we ended up in the fintech space with a collaboration model. So I think with DeFi, we now have the first time the opportunity to really build a fundamentally new financial service infrastructure, and that's where actually the user can take a special role and earn some additional income by connecting directly to the services. But what's the problem these days? So DeFi is super complex and super technical. So I always call it a little bit like built from crypto people for crypto people. So the wallets that you can use like to connect to the blockchain where you onboard yourself are super difficult to use, especially when you know products like Robinhood or Trade Republic in Europe. So it's too complex. Furthermore, there's such a variety of services that you can use. So that's like a small map with protocols. That's definitely not every protocol out there, but you don't know which is the blue chip, which is good, which is bad, which potentially a scam. So how much TVL is in there, and furthermore, like the UIs of protocols, like you usually go on the website, you connect your wallet, and sometimes these protocol websites even look very technical and also not explanatory for users. And the third or the fourth thing is that also like regulation is completely unshaped. So kind of like all these measures kind of don't feel like attractive to users these days. But now there's us, so we want to create the non-custodial wallet that you would actually love to use and then also recommend to your friends. And so we make it super easy. First of all, that we connect directly with the protocols or with the financial service, so that you can, for example, earn interest rate, that you can connect to decentralized exchanges, that you can trade. And in the end, so we curate the protocols, and we also published an open framework for the evaluation, so that people even can learn about kind of like why we believe that it's a better product. Furthermore, you can track the portfolio, because many wallets are kind of like very bare-bound, a little bit like the physical wallet that you have in your pocket. So it has just one functionality. And so with our wallet, so we also want to give like a portfolio view of kind of like the transactions and the investments that you did in the past. And and furthermore, so we're completely mobile based. So we integrate the protocols directly, which means you can sign up, you can create a wallet, you can ramp up some money, and you press a few buttons with your thumb, and you're invested into DeFi and can start exploring. Who are we? Well, we are a super experienced team in FinTech. So Alex mentioned in the introduction, I was the CTO and co-founder at Solaris Bank, kind of the first bank in Germany, or the first FinTech that got a banking license back in the days, even 2 months before N26. And afterwards, I built up Börse Stuttgart Digital Exchange, which is a regulated digital asset exchange. I was managing director there. This is also where I met my co-founders, because we thought, hey, the summer of DeFi happened, and a lot of protocols launched showed that it's actually possible to run a financial service infrastructure on blockchain. Let's do this, and let's start a new company. What we achieved so far? Well, so we were founded in July last year, so that's a little bit more than a year ago. We raised 17 million in funding in 2 rounds. So we raised the Series A round already, which was done with Lightspeed and some business angels. We hired 30 plus blockchain and fintech experts. You've seen the previous slide. Also like engineers from Revolut, SoundCloud, and other tech companies. We have a significant traction for, let's say, the short time we're out there. So there's 500,000 people on the waiting list. We have like a lot of followers on Twitter and social media, and also a lot of appearance in press and in media, because for us it's very important also to really present the topic to the outside world and educate, because really going out and show the public what's the potential, so why we believe that DeFi is the future, that's super important. And we're going to launch soon. We have 8,000 people using our product from the waitlist already. We'll launch soon, also in the US. And also because, well, as I explained, blockchain is a global infrastructure. And therefore, so we can launch very easily in different markets. And therefore, we strive to become the first truly global fintech from Germany. And if you're interested, feel free to scan the QR code, sign up for the waitlist. Would be happy. So if you have questions, catch me, and Also, I would be happy, of course, if you sign up and use our product in the future. Thank you.
So, well, first of all, congratulations on all the progress, and great job presenting. I know you said you're not normally the person up here presenting, but I thought you did pretty well. In terms of this being a pitch, the few pieces of feedback. One, there are a lot of slides that have a bunch of text, and so I try to slim that down. Use voiceover, the narrative, and keep the slides very simple, so that people aren't spending their time reading the slides versus listening to you. Second, I also think that last slide was probably your most powerful slide. So I wouldn't bury the lead in terms of how much you've raised, how many people are on your wait list, great investors that have backed you. The fact that you have 8,000 people using the app, that's probably like slide number one. And then your team slide, I thought, great on the logos and background, but put the people's names. Typically what an investor might do is, let's say we don't get to connect after, after this pitch, but then I go look up you on LinkedIn, see who I can get a mutual intro from. But if I don't know the names of the people on the slide, it'd be hard to do that. So just get a little more specific there. Yeah, I think those are the 3 points I have. Thank
you. Nice job. In terms of for consumer apps, I'm going to give the same feedback in terms of relating it to why you're starting it. And, is it because you like crypto? Is it because you believe in blockchain? I mean, there's a variety of different angles, but it was somewhat unclear why you started it. And I think the interesting angle you could take would be the fact that you started, with a neobank and now you're working in DeFi, and it's because of your experiences in developing the neobank that led you to DeFi. But I'd really want to hear more of that story. The second would be, it's a very difficult space in terms of eyeballs and getting people to stick with it even when they're losing money or making money. And so I'd want to understand more about how you view yourself in terms of the competitive landscape and why you will ultimately win. I think one of the things you mentioned is a global platform, et cetera, but how are you different than the existing players in the space that, it's no small feat to raise $17 million, but a lot of them, have raised considerably more so they can spend more on marketing to kind of, push you out of a specific vertical. So I'd want to hear that strategy as well.
Okay, all right. Then to the first question. So I added very small, like on the last slide, kind of, but like the time was over. So our thesis, so why we created the company, and we were exploring a lot of different concepts in blockchain, like back in the days, also like including whatever yield aggregator and so on. But then we saw like so much competition happening in like a lot of the spaces that we then thought about like, okay, so where actually is the lock-in effect in DeFi and in Web3? So because if it's so easy to move millions from one protocol to the next one, yeah, and kind of then in the end, kind of just like the execution of the protocols and like the prices and so on, like the performance really counts. So we came up with the thesis that we believe that the lock-in effect in Web3 is in the front end, so in the wallets. And so there's, so you guys know, so there's a bunch of really like DeFi front ends, which also now start like to grow like a little bit deeper in the value chain, also providing like wallet solutions and so on. But I think from our perspective, so they're not kind of like, so they're still like more front end with where display stuff, but less like for the execution. And we want to be like for the execution, and especially then mobile first. And coming to the second question regarding the competition. So of course, so there's like hundreds of wallets out there. From our perspective, there may be 5 to 6 really good ones. Also like with teams who are executing very well. Sometimes it's even the not so much funded startups out there at the moment. So of course we built a great product. They built a great product. What we do different is also then really going out like in the markets, because most of the DeFi companies, or I would even say like all of the DeFi companies and projects, really focus on the degens. So kind of the people who are already in the space and know everything about it. So there's just a few companies really going out and trying to talk to the future users. And from our perspective, it's the ones who maybe like bought like a fraction of Bitcoin 2 years ago on Coinbase and heard about DeFi, but never tried it out. And there's like so we have a huge community network in Germany also of the CeFi builders, so kind of like the custodians and so on. And even like many people over there are not so deep in DeFi. And therefore we can kind of like talk to these, let's say, semi-experts, and then over time we want to expand. And of course the product will change along the way because it needs to be like less technical and so on and so forth. And then over time we're going to conquer the market just by going more out, talking to the people who are not yet in the space.
Got it. Yeah, I would leave with that. But yeah, I know we have.
Thank you.
That happens when you're on the run and have to compile the PDFs. Thank you.
Yeah, my name is Thomas. I'm the CEO and co-founder of Divisend. With Divisend, we help investors maximize their dividend returns. What does that mean? Oh, sorry. In the other directions? Okay. Imagine you own dividend stocks from outside your home country, like Nestle from Switzerland, like Porsche from Germany, or Canadian National from Canada. You have this problem of double taxation, withholding taxes and income taxes. And at the moment, such refund opportunities are widely missed out due to technical complexities and fiscal challenges. And we brought it, or at the moment, the situation is like this. That you have in every country different forms, different documents. It's paper-based, it's a hassle. My wife bought a few years ago a typewriter to do that, to reclaim the Swiss forms. In the United States, you need a PhD to go for that. In Belgium, you need a microscope to do that. And we brought it from this world into this world. So that's really leapfrogging. Taxing mustn't be ugly. Taxing can make a lot of fun, and it can look like this. So this is our dashboard where we immediately show people about their reclaimed situation there. And this is embedded wealth. And this is a very large market. So in the dividend market, we talk about $1.5 trillion, growing by 5 to 10% every year. And the reclaim market is around 100 billion, nearly untackled in digitization. And very important, the unreclaimed market is more than $20 billion. In the United States, it's around 4-5 billion unreclaimed. This gives us a lot of room to grow. And as Peter Thiel says, competition is for losers. There's at the moment no other SaaS company on the market that presents this and does that in a very convenient way. So from the end customer perspectives. So in our strategy is based on these 5 distribution channels and based on our securities aggregation API, where we can easily plug into banking groups, into high traffic finance portals, business finance magazines, bank software providers and tech software providers. And we increase the customer retention and the revenue for them, and we see more cross-border investment, so that you really can look at the best investments and not home biased because of the taxing situation. So now our product works in 4 steps, very simple. First, you go on our website, link your security portfolios with our security aggregation API. Then you get the fast overview via our dashboard. Third, you do the claim setup. This looks more like LinkedIn and not like TurboTax. So pretty good and not ugly. And fourth, you submit the application mostly digital, and this is based on our API or in our solution where we connect to the international tax authorities. And we are not an SAP, we are not an Accenture, means we don't sell software licenses or headaches to the customers by writing big checks or writing. Our solution is based on a transaction fee with a high margin, 17.5% on the retail side. Here an example from an average European investor, around 40,000 foreign equity. So we generate around 42 euros in fees. And the cool thing is in the first year, you can maximize that. So there's a 4 times leverage because you can reclaim up to 4 years back. We have already a strong market adoption. So in Europe, we work with Big Fours together like KPMG, with Swiss banks, with the Swiss Stock Exchange. with Deutsche Bank is also a partner of us. Here in the United States, we leverage that right now with EY, with KPMG, and with Plate on the API side, and we target banks like Ameritrade, Charles Schwab, which are strong on the financial advisor side. So, and we also have partners like SAP and Allianz on the employee ESOP perspective. That's quite interesting. So they have a lot of customers here in the United States. We look for tax advisors, family offices, wealth managers, private banks, investment companies, and also expatriates. And you see it, I named it the established partnerships we have already. And as a company with which works very close with APIs, can do a lot of remote, and this is the timeline for going to the United States. It depends a little bit on the contracts we make, but we can go there very fast. So overall, we are blitzscaler, like Reid Hoffman coined this term based on our why? Because based on our API, on our securities API, we can easily plug in. So we made the Plate integration within three hours. We're strong already in Europe with offices in Luxembourg, Germany, and Switzerland. We will open soon in Singapore. We just won last week at the Slingshot event in Singapore. And why we are blitzscaler? One is the API. The second aspect is that the withholding case scales very good, because if you go for a reclaim like for a Porsche stock, it's the same like in Germany, it's the same like in Switzerland, it's the same like from the United States. So you don't have the hassle like in the loan business or in the brokerage business. And the shareholder ownership is mostly outside the home country. So that means a lot of Americans own European stocks. So this is a little bit about our financial perspective. Key financial metric is the free cash flow. And we imagine next year around 750,000 euros and next year 2 million. So we are, some call us as the real Robin Hood. So we are fully self-financed and bootstrapped, won many prizes and also prize money there. We reinvested into the company, and we look for Series A next time around 10 million. There's also a high demand for that. We have more than 30 years combined startup experience from great companies. So I was also the co-founder of a unicorn like Numbers. We worked for Allianz, Vontobel, and have a real diversified team overall. And bringing that to the point where I could also present Coca-Cola, but here Nestlé. If you would have invested in 1960 10,000 francs into Nestlé, and you would have reinvested all the money, the dividend and the refund, you would have around 3.5 million. If you just have consumed the dividends, like then buying from that Kit Kats or chocolate or ice cream, then you would have just 750,000. And like Warren Buffett said, investing is not easy, but also not overcomplicated. Means you need a lot of wet snow and a long hill, and you need dividend. Thank you for having me.
I get to go first. I'm psyched. So that guy was a DeFi degen. You're a dividend degen. There's no question about it. I love this. I love this whole concept. It's actually boring, which is great, right?
But many VCs doesn't love that till now, because they say it's boring and they like more metaverse and things like that. But right now they are coming back and see it's interesting to make real money.
Not all, right? But I kind of want to leave some thoughts with you. I do think that you need to talk more about, sort of the TAM in terms of how big can this company really be? Or is it, this is a business that needs to happen. There's no question about it. It's just like, is this a viral growth SaaS, or is this something that could be steady Eddie and make you guys a lot of money? So you have to kind of think about presenting that first and foremost. And I think, so anyway, I love it. One nit that I have in general, it's like Plaid is like not your partner. You're paying them to aggregate financial data using Quovo. It's like, I don't love when I see like Google and Microsoft on, it's kind of confusing. You're a pro, I get it. I'm just telling you for everyone else. Like,
yeah, I always take courage from the early innings. So when they were just valued at 10 million, But I can tell you, for example, here with Charles Schwab and Ameritrade, you can use easily this APIs. And Charles Schwab mentioned that in his biography also. The cool thing in the United States is to go to the financial advisors, and there you go via Charles Schwab and plug in. You can do that without communicating to them. Just deliver that on the marketplace and create value for them. Thank you.
Yeah, just to build on that point, and great job, by the way. So the way I like to see TAM typically portrayed is a very simple equation, which is how much you charge times your number of addressable customers. And so, the TAM slide that you had, which was more about how big is the notional volume in dividends broadly, doesn't really get me to the point of, can this be a $100 million revenue business that can IPO? So that's, I think, on his point. So just reframing, you have the take rate there, 17.5% on a different slide. Putting those together, I think, will be helpful. I saw the projections for next year. It'd be great to hear maybe on that same slide, what is your current revenue? It's okay if it's pilot or POC or what have you, just kind of lay that out so we can see what the projections are or what the growth rate assumed to be. And then somewhat of a custom point, you mentioned blitzscaling, and when Reed talks about it in his book, he says that certain types of businesses should blitzscale, certain types shouldn't. One of the criteria of ones that should is a high gross margin, so that you can have the capital to reinvest, and it's a winner-take-all market. So I think if you are going to say that you're blitzscaling, just talk a little bit about the margin profile and why there are network effects.
So in case of blitzscaling, it's not only that's the old blitzscaling model, to put a lot of money into it, like in the book mentioned with the Samo brothers from Germany, that they had a shitty business model but a lot of money. But you can do also blitzscaling with the right strategy. That means like an API, as I mentioned that, like with Charles Schwab. So that's a cool thing, and that fits into the environment we have. Not so much money burning, and to be lightweighted with your assets.
I'm happy to jump in quickly. I think here is an example of something I would put right at the front, because initially when I see the pitch, I actually wonder how big of a problem it is. And maybe this is even for the average retail investor, not the actual balance that they have. Because if let's say it's $300 and you're saving them 100, that makes sense. But if it's 300 and you're saving them 30, people aren't necessarily going to use this. And so that's something that I would try to tease out, because I kind of went in there wondering, and you got it to the last slide as opposed to starting with that specifically.
It's not only for retail investors. Look at Warren Buffett. Every year at Omaha, people ask him, when do you sell Coca-Cola? So he received 2 years ago, when he was 90, so much money per year in Coca-Cola as dividends as he paid originally in 1988. And the question is, why should you sell a stock where you have a dividend yield of more than 100%, and that's compounding? So
yeah, but he's not using the software though. He would
not
be paying
right
people
now,
to do
not
it
right now. But
so,
for example, look at Bill Gates. He's owner of Givaudan. He has around 10% in a Swiss stock. There's the amount of tax, 35%, and he can reclaim back 20%. And at the moment, this business is done by individual persons that charge a high margin, and every margin is coming under pressure, and they see that. Also, the Big Four see that they have to change that. Yeah, makes sense. Thanks.
Thank you, Thomas. A bit over time.
Thanks. All right. So it looks a little bit like a Shark Tank setup here, right? So sustainability again. Yeah, like Robert Murdoch was saying, I wish the internet would go away. It didn't go away, obviously, and sustainability will also not go away. This is one of the major topics of the century, and the finance industry is right at the core of this problem that we are facing. Actually, sustainability is one of the biggest opportunity for the finance industry. You can switch from your car to the bus. But if the bus is still on diesel, that doesn't solve the problem. So the whole infrastructure needs an upgrade. An infrastructure upgrade, that's many trillions of investment. So it's back to the finance industry to help us in the climate change. You know, every one of us is part of that. Every one of us as a bank customer right in the middle of that problem, because everything we do every day stand for 60% of all the greenhouse gas emissions, like buying a coffee, filling up your car, paying your energy provider, booking a flight. That's 60% of all the emissions. So if we could tackle 60% of the emissions and just do a little bit better by educating millions of customers, that would have a massive impact. Today, that's a European study, but the numbers are similar for the US. Every third customer would walk away from the bank of America, from the Chase, if they are not offering green products in the future. So green accounts, green credit cards, ESG investments. So what Ecolytic does is basically we provide the tools for the banks to show the customers their footprint and how to do better. It's just a single API. Everything comes with a simple integration. And this is how it looks like. So it's integrated into the front ends of the banks. If you're banking with Bank of America and you open up your Bank of America app, the CO2 footprint would show up. Same for Chase or whatever bank. So it's integrated into the front ends, which gives us the reach to millions of customers. So our vision is to reach 100 million customers in 2025. So this might seem like a high number, but if you look at Bank of America, Chase, both together would already have these 100 millions of users we could reach. And that's why this B2B model is really superior to any B2C model in that space. And that's why we founded the company as a B2B company. So how does it work? Basically, we have 3 modules. It starts with a CO2 footprint. So you see each of the transaction having a footprint. Booking a flight means you have just spent a couple of 100 kilo of CO2, or in this case, you went to a steak restaurant and had 73 kilo of CO2. Now, interesting enough that that's an abstract number, so nobody can, really work with that. So we give a little bit perspective on that number, saying, that's like driving 3 hours with a car. So you have a context to that abstract number. And we also ask user, what's your diet? So are you on a reduced meat diet? Because that's changing the impact you're having. And we also play out these little tips and tricks saying, did you know that frozen food has a 10 times higher impact than normal food? So it's easy to change. That's what we call eco-engage. It's easy to change, and change means a lot of CO2 reduced. And the last part you can do, and that's just a seamless experience, is to offset. If you book a flight, if you went to a restaurant, you could offset that by triggering a donation to a certified project on our marketplace. So, quickly skipping that. So why US? US is obviously the largest market, homogeneous market on the globe. So for us, this is the most relevant market. We have come from Europe, but now we enter the US market, which would mean like there are 500 million cards out there in that region. So it's very good to see. It's very good to see that all the major banks are onto this topic. So looking at the top 10, we are talking to 7 of these at the moment. So they're on this topic and they're thinking about it. They're putting their strategies together. So this will come. So right now, what we are, 20 banks in Europe. One really large one is there. We are partner of Visa, which I was mentioning before in the discussion, is helping us to reach out to the banks, contracting to the banks. So we're partner of Visa in Europe, in the Gulf region, in Latin America, and in the US and Canada. So we're also first to market in Canada. But I've heard like, it's Canada, it's not the US. So we still need to go to the US and have a first POC pilot or bank there. So we have a diverse team, 65 people right now working on that topic from 15 nations. Founded a couple of companies, but this is the most international one I've done so far. So it's an amazing team, and it's the diversity is really one of our core strengths. So what's the impact here? The impact is, it's very simple. Basically, the CO2 footprint goes down by more than 10%. That means if we reach 100 million customers, we could save 100 million tons every year. And that's quite a large number. So, and it could be even more for the US because the footprint is high here. It would be like 150 million each year in the US, 100 million users. Business model times a couple of cents per month per user is a nice SaaS, SaaS model, right? What we also see is engagement in the app is increasing. The banking app was boring, was static. Right now it's getting more interactive. You get all these little tips and tricks on how to do better in your app. So you're spending more time in the app and engage more and engage even deeper. This is actually changing also your behavior. So basically what we see is people are moving from their other cards to these accounts because they have these features. So top of the wallet is changing here, which is very relevant for any issue. Yeah, that was about it. So happy to take your questions. I was more in time than last time.
Yeah, so I think there's a huge market opportunity to combine ESG with FinTech. I mean, the entire world right now is trying to figure out how to become more sustainable, even redefining food, for example. There's legislation like in New York and California to encourage folks to own electric vehicles. So the next step when thinking about understanding sustainability in day-to-day life would be to figure out how to combine it with transactions and financial services. But what I did also notice is a lot of the huge companies that came out of the space are all outside of the US. And so Economy, which does something similar to what you do, a customer-facing solution sold to banks, Minimum out of London, and I can name quite a few. And right now, given the macroeconomic environment for the US, they're now thinking about expanding here. So like, for example, Economy, I know they announced earlier this year that they're expanding into US and leveraging partnerships with MasterCard, Plaid, for example. And so my point is, I think this is the right time to do so, but I'm curious to understand a little bit more about just the strategy. Maybe not in a presentation like this one that's short, but I'll just be curious to understand, given the fact that like everyone's trying to figure out either how to get into the US or develop out a company that combines FinTech with sustainability nowadays.
Right. So very good question and a very relevant one. So we see this as a marketing building right now. This is not about competition for us. Every bank the economy is winning puts more pressure on the other banks, right? That we're then about to win. So we know each other very well. So the economy is with MasterCard, we are with Visa. So basically goes back to the two schemes there, which is giving the access to the partners and the banks. So that's also the solution there. So we go to the market with our partners. So right now we are integrated into Visa's infrastructure. We integrated into TSYS global payments infrastructure. So you can integrate to the payment processor that's actually processing 70% of the North American market and put your product in there, put your API in there so they could reach out to the bank. So that would be like the fast scaling. Yeah, so we would never do this on our own. So you need strong partners. And the good thing is that this topic, basically, all the partners are open. So these are trillion-dollar companies, right? But they work with us because they need a solution in that space. And customers are asking for that solution. Issuers are asking for that solution. So they need to act. Banks also need to act. So that's why the topic is so hot here. And we believe the market is ready.
Just a question. You said 20 banks in Europe are working with you. What does that mean exactly?
That means what happened is basically we started in Europe with the green challenger banks. So, and we developed the product together with them. They were our partners in the beginning. Then we moved on to the tier 2 banks, which is normally that's like 10 million users. And then we moved on to the top tier. So right now we're working with one of the top 3 in Europe, which is more than 40 million customers. So that's how you basically evolve from the smaller banks to the larger ones, right? And US, obviously, you have to talk to all the larger ones and see who's moving first, right?
Those banks are paying customers?
Those banks are all paying customers, of course. The model is pretty easy. So per active user, that's seeing that numbers in the front end, you charge a couple of cents per month times 100 million customers, adds up to a nice model, right? It's not the only one. There's stuff we can do in regards to offsetting, to investing, even to tokenization if you take it on a broader scale. But the SaaS model is the basis, and I think it's fine for a couple of years.
So how many active users do you have now?
We are reaching, well, that's an interesting one too, because banks are usually not ramping up if they have 40 million to immediately 40 million. So we are going above, well above 1 million now, active users. And next year, or let's say first quarter, we are targeting for 10xing that. So really having more than 10 million users, which from the potential of the banks we have is possible.
So your revenue right now is 1 million users times a couple cents per month.
Correct.
Yeah. So I think you got to include that in your slide. Like I had no sense for whether you even had revenue, right? Based on the slide. It turns out you have a decent amount. You have a lot of customers. You're projecting 10x growth year over year next year. You know, I think brag more would be the the overall feedback. Same thing on the team. It says you've started companies before.
Yep.
And you sold them before.
Yep.
Yeah.
So, okay, we should add that.
You
to
gotta
the story. Yeah.
get detailed with it.
Yeah,
You know.
Of course.
Yeah. Investors love repeat entrepreneurs. So yeah, just brag more. Get more specific.
Thank you.
Thanks, Alex. I'm wondering a bit what I've done wrong during our trip to deserve the dubious honor of speaking last. But anyways, y'all are such an amazing audience that I don't worry at all about downward trending attention spans. Anyways, I'll keep it short and crisp nonetheless, just to make sure. Imagine you run a loan business. So you lend money to SMBs, but you don't know your customers' P&L, not even their revenues. You don't know their balance sheet, you don't know their cash flows. That's quite impossible, right? Like, how are you going to figure out whom to lend money to? Or how much? Or at what rates? My name is Nikolaus. I'm co-founder of Myers, and I'm very happy to tell you tonight that it's very much possible to do exactly what I just described. And not only to do it, but to finance over 100 million US dollars within a couple of years, and to achieve industry-leading economics with 18% return and less than 1% losses. So what are we doing? A couple of years ago, a friend of mine told me about his struggles raising enough working capital for his online business. And we sat down and together we realized there are so many small online sellers worldwide that have the same problem. So we came up with one basic idea. Why don't we say we finance prime products instead of subprime sellers or borrowers? What does it mean? Instead of looking at lagging financial indicators like P&L and cash flow and so on, and then trying to figure out the likelihood of getting our money back and ending up with adverse selection, high acquisition costs, low recoveries, so an inefficient proposition overall. We are pulling broad public product level market data from marketplaces like Amazon or Google Shopping. And then we run machine learning models on this data to figure out which products will sell, which won't, the future sales potential. And then we're reaching out to the merchants selling the best products and offer them a loan. Not any loan, it's the most flexible lending product you will see in the market. So this is what we do. And now you might argue, okay, this is e-commerce, so physical products, so it's quite limited in terms of overall SME lending. Yeah, fair enough. But don't forget, e-commerce is a $6 trillion market globally. And if you look at these three core markets alone, Germany, UK, and the US, we're talking about a revenue potential, so interest revenue potential of roughly 44 billion. So the cake is clearly big enough. And we're working hard on increasing our share of the cake, growing sales consistently this year by 50% every quarter, doubling the bottom line, and reaching more than 1 million for the first time in the third quarter this year. In order to establish a model like this, you need a strong team, you need awesome advisors, and you need a halfway capable management, and we are lucky that we have all three. We're working together currently on entering the US with a small pilot this year, focused on 2 states, state of Florida and New York, and then next year on the back of a Series B round on a broader rollout. Milestones we want to reach next year, next to the US, a 10 million plus annual revenue run rate. And positive free cash flow, not to forget. Our overall mission is to democratize asset-based finance globally, so across all geographies, across many verticals, and with different products as well. So this is Miles in a nutshell, and I would like to invite you to join us, be it as a partner, as a customer, as an investor, debt and equity, or simply as a friend. Thank you very much.
Phenomenal job presenting. Clearly practiced, and slides I think structured very well. Just as a reference, when I talked about the TAM slide, bottoms up, very simple equation, multiplying a few numbers together, like to get the actual revenue potential. I think that was exactly what you did. So yeah, exactly. So this is based on the actual pricing model of the company. So that's what investors want to see, right? Not like the top notional volume of all e-commerce products sold or something like that. So, and you were specific on team, you bragged, sufficiently. So that was good. How much are you raising again? Did I miss that?
I didn't say. It's 15 million. It's a number that's hard to say because everybody's asking 50, and then I say 15. So yeah, that's the amount.
Okay. So I just have a couple thoughts. I've looked at a lot of companies in this space, and so a few thoughts. One, just in the macro environment with rising interest rates. Curious about. I saw you want to secure a debt facility. What do you have now? How do you mitigate the risk of rising costs? Do you pass those through? Do you not? So that's one thought. The second is, I love that you're running machine learning models on public data. The P&L opacity problem that you mentioned is very much alive and well. Curious how you get repaid. If there's any difference there, if you can get repaid automatically or through some kind of integration with Shopify, Amazon, et cetera, out of sales. And then three, just as you scale, I think you had a slide on economics. Maybe I just didn't catch the specifics when it comes to your loss ratios. I know they were good, but the net interest margin, if it's on there, or maybe just that'd be a suggestion to include it.
Sure. So 3 questions to sum it up. The first one was debt and rising interest rates, right?
Yep.
The third one about the margins, net interest margin, and the second
one was how you get paid back.
The product. Yeah, I didn't talk too much about the product itself. That's true. So the debt environment, we have roughly 50% gross margin after funding defaults, and we're trying to keep that 50% stable. So as our funding rates rise or might rise, we just actually increase them, but we could also increase the advance rate. So we have to put less equity into the portfolio, and we're also rising prices. And in Europe, at least, the usury laws allow us to rise prices. In the US, it will be slightly different, but we're always trying to keep our margin stable and just swing with the macro rates, with the banking rates. On the second question, the product itself is super flexible, so we don't have any annuities, we don't have any repayment obligation within a standard duration of 24 months. But the typical repayment period is around 5-6 months. So it's a typical working capital cycle. And the money gets always repaid because we usually take the product as collateral. So it's asset backed, not only asset based. And then you repay money in order to release the collateral. And there's multiple ways this can work. Either you repay and then we send a dispatch to a third-party logistics provider, 3PL, or you have the goods in your own warehouse, and then we just track your inventory level. So we plug into your ERP or warehousing system. The third one, net interest margin. Yeah, so as I said, it's roughly this 50% gross margin after funding and defaults that we want to keep stable. The APR is a bit lower, at least on the European levels, than the revenue-based finance competitors, who oftentimes mask their incredibly high prices through the fixed price model. It's like our daily job in educating the sellers how much they really pay when they do revenue-based finance. Yeah.
Thank you.
Just some thoughts to leave you with. You did hold my attention. This is a different model. I would want you to, the next time you do this, maybe think about, we simply call these companies, like, talk us through like how you bagged your first elephant, how aggressive your sales team is, and what you're using to go to market so that you can gain some credibility in the marketplace and really scale this business. And my nit was, you said, we're going to do 10 million in ARR next year. Like, that's a leap of faith. So I think you said it declaratively, but you have to, if you are, back it up with some numbers. But great job. And this is a super interesting company.
Good point. Thank you.
The only thing I would do to piggyback on Jesse's comment is to think about and acknowledge, and you do mention the competition, but the fact that, Amazon, Shopify, Square, which may not be as relevant here, all have their own captive financing arms. And so you need to, in my view, talk about not necessarily the product, because people sometimes go to financial products, especially for SMBs, that are easier to use and have less friction, even if they're higher interest rates. And so I would talk a little bit more about how you end up beating the Shopify offering, Amazon offering, et cetera, when it comes to financing a little bit more in the pitch.
Yeah, good point.
All right.
Thanks.
Nico. Also, big applause to our investors panel. Thank you so much for being on stage and challenging our startups. Thank you. So we are getting to the next portion. I need to click through it. So thank you so much. Just cocktails are waiting. So let us set up stage. I just put everything over here while introducing Scott again on stage. Thank you. Also, Leiter, please. And I've seen Jennifer here. Over there, please come.
Okay, this thing is on. There we go. Come sit over here, Jennifer. I realize that this is now this conversation is between the session and cocktails. So, you put us in a great position, Alex. But it's okay. We'll make it fun. I think one of the things that I've learned by sitting here and listening to all of those great pitches, as well as the conversation from earlier, we've talked a lot about technology. We've talked a lot about data, a lot about strategy. So my goal for this is to really talk about all of those things are great, but without people, none of these things are possible. So want to keep this conversation flowing in a few different ways, starting with customers and data, something that both of you know a fair amount about. Talk a little bit about your journey, then end with culture, and then we will go talk about all of this over cocktails afterwards as well. Sound good?
Fantastic.
Sounds great. Okay, let's start with you, Lyda. So you wrote a book, Finances Are Female. You did a bit of research. By that I mean a lot of research on the subject. So can you talk a little bit about, data-led first, research first mindset? How are the needs of women different? What did you find in the book? What did you find, through FinMarie?
Well, so when you say women, obviously there's the U.S. versus Germany, and there are significant differences when it comes to attitudes in Germany and in the U.S. So I'm an American. I come from this environment. It's an environment that where women face a lot of issues with credit, issues with risk, issues with debt, and you have, of course, a little bit of that in Germany, but the issues are very different in the German market and different for what women face. So in the United States, obviously, the difference between saving up for your retirement, you're probably thinking about what is my healthcare situation going to be, right? That's less of a concern in Europe. The situation for healthcare there is very different. The situation for consumer debt, when it comes especially to, for example, school and education costs, very different. So there are obviously cultural attitude things that we can talk about with regard to risk, with regard to the way that that women are carers in their families and how they approach their careers. But I think there are some fundamental differences too in societies which women have to address, of course, with money when they're thinking about their opportunities in life.
I can speak to that firsthand. As an undergrad, I graduated with $120,000 of debt for
Yep.
undergrad school, and that was half of it was paid for in scholarships. But New York, I went to New York. I didn't go to NYU, wherever Max is. I didn't go to NYU. Sorry, my husband did. I went to Fordham. But $120,000 at 21 years old, that was a debt that I had. So it's a really big thing. So obviously, a lot of the penetration for FinMaria started in Germany. Can you talk a little bit about where you see the opportunity in the German market for women?
Yeah, absolutely. So when we talk about women in Germany specifically, they are it's for all of the women that you see represented in leadership, Angela Merkel, et cetera. There is still a lot of inequality that women face, especially in the workforce. I mean, in the United States, I think the number is like 70% as far as a wage gap. In Germany, you have similar gaps, right? Germany is actually one of the leaders in pay gaps between men and women. And so that's not something that anybody's really happy to look at, but it's one of the facts. And the situation in Germany is that women are quite often primary carers, and of course this is the situation in the United States as well, where women will be caring for at least their own family, if not their extended family, maybe their possibly aunts and uncles, elderly parents. And so women proportionally tend to spend more of their take-home pay on reinforcing the family unit than men do. Men tend to have more freedom with their income, and so yeah, I mean, I think in both countries you do see some statistics like that, but in Germany specifically, we see that 3/4 of women today are looking at a pension of 400 euros or less, and that's some of that is due to gaps in their careers when they look at starting families. But that's also some of it is due to the pay gaps that you see.
We didn't prep. I mean, I know you had some conversations with Alex, but I knew, and I wasn't going to say anything. Women tend to, in conversation like this, come with data and hard-hitting data that's just incredible. So that's awesome. And when Alex and I talked about what we were going to say, I also sat and listened to your pitch. So I just want to go to that for a second. How do women consume? How and where do women consume content? And how are you using that as you're building out FinMarie? And is it different than men?
Actually, yeah. So it's interesting that you comment on that, because we find that a lot of our clients will come to us because they've seen my co-founder Carolina in Cosmopolitan, or they've seen her in the consumer press, right? And they say, okay, well, I've seen her on television. I've seen her in a magazine. I like what she had to say, and I trust her when it comes to financial decisions in my life. And so we've seen a lot more of that with our audience too. They are interested in influencers. They are interested in how do other women do what they're doing. They are very interested in the kind of content that is personal, and then that in turn, I think, it creates trust.
So Jennifer, data is, you live, breathe, sleep, eat data. I said earlier about me doing that for FinTech. That's you. So what have you seen? What does the data tell you from some of the stuff that Lyda was just talking about? Where are the financial challenges for women, and what have you seen in the work that you've done?
So I think it's interesting because it drives how women make choices about what they do with their careers, right? And I know we sit here in 2022 and want to hope that whether we're here in the US or in Germany or in the UK, it doesn't matter, that we can have this lovely flexibility of choice. So you said we come with data. I think we do. We also come with real experience of what it means to make hard choices with our careers, with our money, with whatever it is. I got divorced in 2015 and quit my job because I couldn't figure out how to raise 3 kids. Now, I was in a luxurious position where I could quit my job for about 2 years. Most women can't do that. It has set me back, there's no question, but I didn't know how to manage 3 children that were young, a divorce, selling a house, and had no bandwidth to figure out how to do it. And I think that's what we underestimate. My former spouse, great guy, we just don't get along. He didn't have any of those problems. He didn't have to worry about who was going to take care of the kids, how they were going to get to school. And I think women take on those responsibilities, and we make our choices for our careers, our money spending, and we're in very difficult positions. And what I see happening at our organization is it's hard to attract and keep women in positions of the ability to move up, right? So we want to create this wonderful perspective that women can move up in the organizations, and it's very hard because you have so many other things calling on your time.
So can we just keep going there, Jennifer? Because I was going to actually go back to you, but I think you've already started it. Can you just tell us a little bit more? You have an amazing role. You're doing some great things. Can you just tell us a little bit more about your journey and how you got here? I mean, reading your bio was just, this woman deserves multiple awards for the stuff that you've been through. Managing data warehouses. I used to work at a bank. Oh my God, that's the last thing I'd want to touch in my life. Like, just tell us a little bit about how you got here.
Sure. So I am all but dissertation in econometrics. I thought I wanted to be a professor. I was back to, I think, how men and women treat each other. I don't think I'm that old, but in 1990, when I went to grad school, I had a professor in econometrics who said, all you women in the class, of which there were only maybe 5 of us in a class of 20 PhD, first year PhDs, said, sit in the back because you're not going to participate in this class. So it kind of changed my perspective on what I wanted to do with my career. So I stayed, I finished work. I'm all but dissertation. And I went into a workforce that in the 90s was in the US recession. So I took whatever job I could get, which was a real estate economist. Really interesting stuff. I did that for 2 years, met my first husband and moved to New York. And so I feel like I made a lot of decisions based on personal realities rather than what I want to go sit on a trading desk, or it was personal realities that drove kind of my choices. I ended up at Citibank and I spent most of my career there. A wonderful place, a wonderful career. I joined it because I grew up in a really small town in Pennsylvania, and I was so impressed with this global organization that would allow me to travel, to meet people, and to create an experience with diversity of thought. And I think that became part of what I wanted to drive my career, right? So I spent 10 years doing risk analytics is the easiest way to describe it. And then 10 years I jumped into technology because my boss said, Jen, risk technology is just like these analytic models you've been building. It's just an optimization problem. So why don't you dive into this? And so I had good guidance, but making career choices based on what was good for me personally and what would fulfill me was really what I was trying to drive to. And then I fell in love with data. So data is how we make all of our choices and decisions, personal data or like real life data. It doesn't really matter. And I fell in love with it. And when I came to DB a few years ago, it was an opportunity to really kind of figure out how can we use this information, not just to make better choices for our customers and clients, but for our own people. How can we grow and develop our people to what they aspire? And so that's what's kind of driven me.
Love it. Now I'm going to go over to you, Lyda, but before I do that, I think one of the goals here, as I said, we talked a lot about strategy, tech stacks, all those things, and it is the human element. And the goal for me is to humanize leadership. When you started talking, Jennifer, about the 2015 moment, I was laughing because as we had this lovely photographer here taking the picture, I don't know if you can see, I'm totally stained. So yesterday was Halloween here in the US, right? I have a 2-year-old, was out late trick-or-treating last night, which meant a lot of sugar intake late night, late morning. I was the one who took care of my son, took him to school, back-to-back calls, ran to get the car to come here, needed the espresso. It's been that type of a day. chugging the espresso down the shirt, and this is what it is, and I get to go take pictures with stains everywhere. It's just part of being human, right? Now, back to the data part, because I want to talk about the entrepreneurial journey, because that's quite a different one. So much of that has to do with networking, especially in the earlier days. I also can't stay here and network, because guess what else I got to do? I was gone in Vegas for a week last week. My son isn't going through a sleep regression and is freaking out if I'm not putting him down to bed tonight. So with that, just 2 data points about women that I've seen at Money 2020. One is, so we have across our stages, across our shows, over 40% women. We do a lot of different pitch things like what you just did. The number of women who apply, we accept, by the time they actually come on site, they try to put their male counterpart or co-founder to be the pitcher. It happens all the time. Secondly, women speakers drop out at 40% is really hard to do, drop out at a rate of twice as much as male speakers. So our numbers are always higher the 2 or 3 weeks going to the show, and all of a sudden they drop about a few percentage points because women drop out. So first of all, you did an amazing job on your pitch. Now tell us a little bit about your journey and your journey, your journey with entrepreneurship.
Well, I would say that that first off, it's just wonderful to be on a stage with like fellow nerds. I think that there are that there are so many women who are kind of underrepresented as nerds. And actually, a quick story about that. I was actually, when I first came to Berlin, I was interviewing with a company, and the CEO of the company said, "Oh, well, you know, of course you've been working for 20 years in product and technology, but like we've got some really nerdy people here. Do you think you'll be able to talk to these really nerdy people?" And I'm thinking, I'm like the biggest geek I know, you know, like, but you know, it's I think there's still bias around, you know, can women be real nerds? Can women perform in that capacity? And then can women also perform in the capacity, of course, of being everything else that women are asked to be, and everything else that women step up to be in companies like what you're saying. And then be on stage, of course, representing all of womankind, right? Or to be the one that is stepping up when nobody else will, you know, when it comes to caring for the kids and the family. So I think, you know, when we look at women in business, we have to look at somebody who really requires flexibility and support and a network. And so when you're talking about women and networks, I think that's really essential for success in both having women in great roles in your company, but also having women represented in organizations, you know, like Money 2020. So like the women that I know who are successful at kind of doing it all, they're not doing it on their own. They're doing it with an army of support behind them. And I think, you know, whether that's you know, nannies and aunts and uncles and, you know, the support of men in our lives, you know, a woman who is really successful represents a lot of other people.
Yeah, and I think that ties in really nicely, because we started today with Christiana, the CEO of the Americas for DB, like amazing powerhouse women. We've got amazing powerhouse women in the two of you. So let's move over to the last one before we get cocktails, which is around culture, culture and talent. We talked a little bit about that in the session earlier, but I'd love to dive a level deeper with the two of you. Jennifer, you have global responsibility for culture and talent at DB. And I would love for you to, in your mind, like define what is the culture of DB? What does culture mean for you? Let's start there. And then, you know, how do you, we'll start there and then we'll dive in another level.
So it's a good question. And I was attracted to DB because I saw a place. I joined 3 years ago, and I saw a place that was willing to recognize where it was and the transformation that needed to occur, and was willing to put the right people behind it. So I met Christiana at a lunch down at 60 Wall Street. And I walked out of that lunch and said, I actually don't care what job she wants me to do. I want to do anything that's going to be around that energy, that thinking, and that care about people. And I think that's what I've taken away through my time is we want to encourage an environment where people are willing to not be afraid to fail, to take challenge, to take risk, and to see the benefit of that. And so I think it's starting to see itself as that kind of a culture, and I really appreciate that. We also, I think, have recognized that we need to create support structures for our people in different ways. So women need to network in very different ways. We've kicked off a couple things that I'd mentioned, because what we see in technology, for instance, is women go on maternity leave and come back and get pushed out of engineering tracks and into program management. Nothing wrong with program management. My husband's a program manager at Credit Suisse. It's great. But sometimes they get pushed and they don't want to be pushed that way. So we just kicked off a couple of programs where we bring women back into engineering. So they leave their day jobs. They do 2-3 month stints in classwork so they can relearn how to code, and they're guaranteed an engineering role once they come out. So things like that make a big difference in how a woman can really start to navigate. And I think that's one of the things that the bank really cares about, is navigating your career and really developing that with the bank.
So it's interesting because I said earlier, but I have a team everywhere from San Francisco to Singapore. So just on the mat leave, we'll start there, but I'd love for you to expand. My team in Europe, so a lot of them are in the UK, some are in Madrid, whatever else, but most of them in the UK, and they get a year of mat leave. In the US, the team gets 3 months. So how has that shifted for you across Germany, US? Like, can you talk a little bit about the mat leave experience for you as a leader and how you balance that out? Because your team is doing the same stuff, just in different geographies.
It is, and it is hard. And obviously there are regional differences, legal regional differences that we have to take into consideration. And I think one of the biggest things that we've done in the US that's really important is equalize the maternity leave across mothers and fathers, so paternity leave, as well as for parents who adopt. And I think that kind of equalization is really important. So we're making real strides in how we handle it in the US. And I think that's changed a lot since I've had kids. My kids are 15, 17, and 19. And with my first, I had 6 weeks maternity leave. The day after I had the kid and came home from the hospital, I was on calls with Brazil, trying to work through things. So there's a real difference in how we treat people who have children. And I think that it's an important to say people, because it's not just women or men or that binary gender perspective.
And what about more broadly, not from a Matt Pat perspective, but across, culturally across Europe, across Germany and the US? Have you seen anything? How do you try to make sure that the culture that you and Christiana set out is there, regardless of where you are geographically?
So I think there's a lot of focus on creating conversation. So we spend a lot of time with our female colleagues in what we call mentor rings. And do you get it? Mentor rings. They're groups of women. They're all different levels. They're usually led by a senior woman, but they're a nice mix. They're associates, they're analysts, they're AVPs, they're VPs, they're directors and MDs, and we get to share our experiences. The most important thing that I think I've taken away from my work with Christiana and my time at the bank is we have to share these stories and be really honest and open, because if you don't see the experience that you're having at senior levels, then it's going to be very hard for you to understand how to navigate it. And if you can hear me, I mean, my experience is limited. I've had a divorce, but if I've had women who've heard me talk about that, and who've come and said, I didn't know anybody that has gone through this at work and talked about it. And there are so many other examples, going through menopause, going through pregnancy loss. Talking about things like that in an open setting at work is really important, because it creates the opportunity to connect with our people and to create that culture where we can all talk about the things that are impacting us.
Makes a lot of sense. So, Lyda, I'm going to go over to you. Same thing around culture. Obviously, you have very good reasons, because it was the people, it was Christiana that brought you to DB, but it's a much bigger, stronger brand name. Not that FinMarie isn't, it's just a baby so far, yes. Right? So when you're a smaller company like that, how you get to define the culture from the onset, how did you and your co-founders think about that? And when you think about what is the culture of FinMarie, what is that for you?
Yeah, I mean, when you are small, obviously, there are different incentives for people joining your company just right off the bat. Like if you're joining Deutsche Bank, there are, you have brand, you have a larger salary, you have a bigger benefits package, and so anybody who's joining a startup, I mean, you as a leader in a startup have to be constantly pitching, right? You have to pitch to the people who would join your team. You have to pitch to your partners. You have to pitch to everyone all the time. So you constantly have to represent the company in a way that resonates for them, because they're not joining you for the huge pay packet, right? They're not joining you for the big brand name. And so the way that you pitch to them, the vision that you give them, the energy that you are able to offer them is just the first thing that probably differentiates a small team like ours from what you can do at a much larger company, where their first touch point is maybe with the HR department or whatever. But we also have an ability to be very personal. I mean, we have 12 people on our team. We know kind of their life stories, and we don't have the communication issues that larger companies can have, and the gaps in knowledge between the people who've just been hired, for example, and the people who are running the operation.
So when you talk about the hiring, obviously totally different scales, but you're both still hiring. What do you look for when hiring? What are the key attributes that you're looking for people on your team? I mean, obviously each role, so ignore the experience, but like personalities, attributes of that, melds with you guys.
I look for people who are flexible, who are kind, who are generous with their time with others. So for example, this is essential, I think, especially in small companies. Everybody all along the way needs to have kind of a certain level of ownership over the company, and needs to work with different people at the company in different ways at different times, because you have to even within your team kind of pivot roles constantly.
Yeah, I think that's right. And I think it extends itself to large companies, because there's so much at the large corporations that is about matrix management. So I have a whole variety of stakeholders. So that kind of that flexibility I would agree with. And somebody who wants to be a part of a team, who understands teamwork and wants to engage in that's what's most interesting to me.
2 more questions and then we'll go get cocktails. Let's start with you, Jennifer. You've had such an incredible career across some really big names. When you think about what you've seen, gender agnostic, what have you seen in successful people? Like, what are some of the key things that you've seen for people who have, climbed the ladder, done, big, small things? Like, what does that look like for you? Like, what have you seen that you admired?
So it's almost like 2 questions, right? So there's a way to be successful, and it may not be things I admire.
Okay, let's just focus on the admire part then.
Yeah. So a collaboration. I think that's really what I see when I see people who are, in a senior role, and I want to be like, I want to emulate. It's that kind of collaborative spirit who is interested in understanding and engaging. Like, what is your pain point? What is your problem? And how can I help you solve it? Yep. And I think those people get ahead very, very easily, because they've brought everyone along that journey with them, and then they can really have a deep impact.
So last ones, and do we have time for one question, or we want to go to cocktails? He's looking at me like we should go to cocktails.
We do like cocktails. I mean,
okay, it's fine. I'll end with the question. It's fine. Advice for female founders, having gone through what you've gone through. If you could go back and give yourself advice when you first started, what would it be?
Yeah, interestingly enough, like I've done a lot of mentorship of early stage startups, because again, I guess I've been working in the industry for a long time, but it wasn't. I didn't start doing that until somebody said, "Hey, I think you'd be good at this. I think you could do it." And so one of the things that I learned from that was, like, I've been ready for a long time to do that kind of work, and just didn't didn't give myself permission, I guess. And so I guess my advice to people is, give yourself a check. You might be more ready than you think. And if somebody else needs to give you permission, it might be a little too late already. And which is not to say, fake it till you make it and be, an Elizabeth Holmes and lie, but, maybe leap a little before you think you're ready.
Then advice over for you, Jennifer. We have people from all facets of career, as early as in college, obviously 20, 30-year veterans. Advice for, females, but anyone who maybe are thinking about getting into financial services, what would you say to them?
So I would say, don't be afraid of a challenge that's presented to you that you just don't think is fitting to the thing that you thought your career was going to go through, right? Somebody may come to you with a real challenge. Look at it as a problem and figure out how you can solve it, because it could just be the thing that changes the way your career. Don't get stuck in how you think a career should be. And I think, actually, one of my best girlfriends I met in grad school, and she's Viennese and now lives in Munich. And we always talked about how to not be afraid of those kind of things and to really drive things forward. And to just take those challenges and not be wedded to this idea of what a career might look like for you.
I love it. Alex Hakim, did you want to say anything else, or do you want me to close us out? Okay, perfect. Thank you.
Scarlett, tremendous job, and thanks a lot. Now it's time for closing. We decided to do this in a duet, that I don't forget to anybody who we have to say thank you, because this event is something special for us. We are a small team, and we made something big happen here in New York. I hope you share this with us, with everybody who is and has been on this stage. And so first of all, I'd like to have a clap to all the FinTechs that came over and finish now their journey in New York.
Yeah, also for all the panelists who spoke and really foster transatlantic connections. Thank you for coming, and thank you for joining the stage. Hope to stick around so that we can have a drink afterwards. Thank you so much.
And all the people that organized it, those are not so many, but once again, thanks a lot to Berlin Business Office together with us doing this here, but also to Deutsche Bank, to Joan and Heather. They are busy with another event currently, I guess, but they also will get a buddy bear here, not only the CEO.
Yeah.
Give a clap to them.
So big thank you to Deutsche Bank to host this event here, especially again for Joan and Heather who organized it with us here. It's been a big help, and also look how we got here, and a huge audience, almost 200 registrations, guys. Thank you so much for coming.
Thank you. And I think there's Brian who helped a little bit.
Yeah, I called out Brian, but yeah, Brian also, big thank you from Venture Out.
All right, and for sure, we forgot some people. Just keep this whole movement going now. That's a good starting point, and now we're looking forward to have some drinks, some networking, enjoy the view over the Central Park here, and once again, have a good time now. Thank you, Alex. Yeah.
Thank you, Achim.
All right, thanks.
There are people outside to guide you to the reception room. For the panelists and